All right. So anyway, I want to bring in our first guest, and you probably hear and heard about her so many times, Alyssa Morano. She's been on TV everywhere. She's obviously the founder and the owner of an international company called the Stock Swiss. She's very well known. She even produces her own TV show, and which she's going to talk a little bit about. She's basically a little bit like my kind of style, which is what I really liked about her a lot. She basically goes out there and kind of more or less shows you the strategy of the golden gaps. That's what she's really known for. She's also has been seen on Fox Business. She's been on pretty much all of them, Fox News, CBS, all of them. She's actually a regular guest there, so which is great. So we're very thankful to have her. She's been here before, and we're glad to have her again. And she's going to take over, talk about maybe about 15 minutes right now, and then she'll tell you something a little bit at the end of how you can get to know a little bit more about her and about her strategy. And then I will be picking up right after her. And then after that, we'll have Hubert Centers. So without further ado, not to take too much time, Alyssa, the stage is all yours, so you can share the screen, and we'll get started.
Good afternoon. Thank you for that wonderful introduction. Can everyone hear me?
We all hear you fine.
Okay, great. I'm going to try to screen share now. Let me know if you see the slide.
Perfectly.
Wonderful. Thanks so much for having me today. Beautiful, cold day here in New York City. And today we're going to talk about gaps. This is a great time of the year to start to think about trading. Why? Because we're getting into the end of 2020, and it's a good time to prepare yourself for the next calendar year. Now, what I do, as Fausto said, is focus on gaps. Gaps typically happen in the 4 quarterly earnings seasons, which again, earnings season is not right now. Earnings season will start in January 2021. We have a few late earnings right now. Adobe reported last night. Costco is tonight. There's a couple late ones here towards the end of the year. But now is a good time to prep for 2021. If you have not met your goals for 2020, which some people have exceeded their goals for 2020, some people have fallen short of their goals for 2020. I'm talking about financially and trading wise. It was really a year for the books. Personally here, because we were in lockdown the whole year in New York, and we're still in lockdown here in New York, I felt like this year was a very active year for me. Whether or not that continues into 2021, I do not know. I think we're at a point now where no one knows where the future is. And the nice thing about active trading, which is either you can do for options or day trading, I do both, is you don't care what the long-term trend necessarily is of the market or stocks. When you are actively trading, you're getting in positions and you're getting out with profit. You're in, you're out, you're in, you're out. That could be in several minutes, that could be in several hours, that could be in just a couple of days. So I consider what I do an active strategy. So this isn't long-term investing, okay? Trading is you are chunking it out. You are going into a stock, you were getting the momentum of that move, whatever that move happens to be, and then you're booking the profits and you're getting out. So you're going long and you're going short, or you're buying calls or you're buying puts. And for those of you, I'll talk about a couple options trades in this webinar today, excuse me, but I just do simple calls and puts. The options that I do are not any fancy dancy strategies. Everything I do is based on my gap rating system. So this is me. If you have any questions, you can email me at melissa@thestockswoosh.com, or you can feel free to call me at 929-3200-GAP. You can follow me on Twitter, Facebook, YouTube, or Skype, and I have all my TV hits. I usually post them on YouTube after the fact. Again, this has been a very interesting year to trade. Right now, the market's been choppy. Yesterday, we sold off. I will tell you that we were in shorts before the market sold off yesterday. The trades were down until they went. So they were down until they went up. If we hadn't been in those short positions before the drop off, I don't think I would have gotten them because we fell out of nowhere between 11 o'clock and 12 o'clock Eastern time. So I read what was going to happen. I anticipated it and got in the trades, early enough to get the move, not knowing exactly the second that the move would come in. And I did that because I read gaps. So how do gaps work? A stock gaps when the close of the market or any single stock is different from the open. Stocks can gap down, stocks can gap up. The market gaps almost every single day. When I talk about the market, I mean the QQQs or the SPY, or you could even look at the diamonds, which is the DIA as far as the ticker symbol. I tend to look at the SPY, but I do look at the QQQs as well. So a gap is just the difference between the close and the open. And that's what I look at. And I look at it in the pre-market, okay? Or you could look at it in the post-market. Again, there are some earnings tonight. You can watch Costco tonight to see what happens after 4 o'clock. So trades occur, positions are put on or taken off in that post-market and pre-market time. If you do not know how to look at post-market or pre-market activity, well, that's something that you come and learn from me. Basically, you can look at it on your level 2, or you can look at it on a chart if you can look at your pre and post-market data. Now, what is a gap? Again, let's just go over a daily chart here. This is Amazon. As you see here, going back this whole month of November and December, this is Amazon's daily chart. The stock has been pretty much in a range. Okay, it's been basing out here in a tight range. Now, I don't have the SPY up right now. If we have time, I'll talk to you about the market at the end. But the market has made new highs. In fact, the market made new highs yesterday. We were short when that occurred. So the market's made brand new all-time highs. And yet you've had many, many stocks that have not. Typically the tech sector, Amazon, Apple, Netflix, all the things normally that would drive the market have been lagging. So that was one thing that I noticed, which told me that there wasn't going to be the follow through in the market. The irony is that people are buying the market here today. This is a terrible place to be going long the market, in my opinion. Not even for a day trade would I go long the market here. Yes, it's still strong. Yes, it's in an uptrend. Yes, it's on support, but I wouldn't be taking the market long here. Anyways, let's take a look at what a gap is, just to go over a basic definition of it. This is back first week in November. The stock had a gap up, closed here, gapped up. So it closed here at one price around 32.50 or something of thereabouts. Then it gapped up here to 3,300. So this was a bullish gap. So this was a bullish gap. What is a bearish gap? When it gaps down. Stock closed here, gapped down. Okay, so it closed around here and then opened at a different price lower the following day. Fell, that's what the tail is, and then bounced back. Then it gapped down again, fell. Then it closed here, gapped down. Then it closed here, gapped up, rally. So there are bullish gaps and there are bearish gaps in this chart. So what do? I get up in the morning early and I determine if I'm going to, what stocks I'm going to trade for one thing, whether I'm going to do them as day trades or options. Amazon is something that it's very cost effective to do it as an option. It's a very expensive stock to day trade. I do not day trade this as far as an equity trade. This makes more sense to do as an option. The benefit of options, if you've never traded options, is you don't have to worry about margin, which is good if you have a small account or even if you want to trade very expensive stocks, which Amazon is. It's the most expensive thing, I think, in the market. But again, getting back to what I was saying, there's many, many gaps in here. Not every gap up can you go long. Not every gap down can you short, okay? So I developed a method where I figure everything out in the morning early, or sometimes at night, but I usually wait to the morning because things can change from the nighttime to the morning. And I figure out what stocks I want to trade in and what direction based on the gap. So everything I do is based on the gap. Why? Because gaps equal shock. Okay, that is when you have a gap, okay, it's shocking. Again, this could be up, this could be down. It's something that happens that is unexpected, okay? It's shock, shock, shock. So this gives you something as an active trader to play on, okay? Shock equals what? Panic. And again, you could have panic buying or you could have panic selling, okay? I love to short. I probably, in fact, I know without even looking at every single trade I've taken since January, I've shorted more than I've gone long. And typically year over year, that's what I like to focus on. So shock equals panic. And sometimes what happens is people will do panic buying. You've seen that in stocks like Tesla. Oh my gosh, we got to get in. It's going higher. We got to take it. We got to get in. Sometimes you see that in stocks like Apple, things that people love to go long. Okay, they quick, got to get it, got to get it. And in selling, okay, you see that, and we saw that in the market yesterday when you had panic selling. Again, I do not follow fundamentals. I am aware of what happens in the news because I appear on news programs. But yesterday, no one reported in the national news media what had occurred to create that selling until way after the fact. So you were late if you didn't know. There were people that took the vaccine in Europe that had negative reactions to the vaccine. I believe the one patient went into shock. And at the exact time that that happened, the market started selling off. Now, we were already short. That's not the reason I took the trades. Again, it was based on the gap. But I'm saying if you're trading based on news and fundamentals, you're late to the party. You are probably getting hurt this year with all that has occurred, particularly with COVID and obviously the lockdowns as well. And I also, this is a side note, and I say this as someone that appears on news programs, you really cannot rely anymore on one particular news outlet. Things have changed a lot. Now, we may have many very different ages of groups here, but years and years ago, you could read one newspaper and get everything you need. You could watch one channel and you could get everything you need. Nowadays, people have to do a little bit more homework. You have to maybe watch several channels, go into social media, read newspapers. It's become more difficult actually to find news and to get news and to find the really what's happening in real reporting. That's frustrating even to me as someone that appears on news programs, but it is something that I've become diligent about because of the fact that obviously I'm trading and I'm in the market and I need to be watching positions, especially if I'm in something overnight, okay? So what else happens after the shock, after the panic? Then you have what? You have volatility. So the panic that happens out of nowhere then equals what? Volatility. Volatility, again, isn't necessarily something that drops. Volatility could be up, okay? Volatility is anything that happens that's unexpected. You can have volatility going up. You can have volatility going down. A lot of people think, well, volatility means selling. Not necessarily. Volatility is anything that occurs that is something that's unexpected, again, which is a result, which happens because of the panic. So the panic creates volatility, and you did see that in the market yesterday. You're not really seeing that today, okay? At least not in the overall market. Then the volatility equals what? Momentum. Now, as an active trader or any type of trader, swing trader, day trader, options trader, whatever you're doing, the goal really is to get a big move or as big a move as you can. If you're scalping, it's going to be extremely difficult for you to make a lot of money unless you're taking big positions, which means you could be putting a lot of money at risk unless you're trading low float stocks, which I do not do. I find those to be completely uninteresting to trade, and low float stocks are not traded by institutional money, which I'm going to talk about in a minute as well. So all the stocks we trade are companies, real companies that you shop out, go to, know about, that report earnings, and they move, okay? They have volume and they move and they have big moves. For example, if you take 5,000 shares of a stock and it drops $1 and you're short it, what do you make? $5,000. Simple, okay? So we want to trade stocks, or I want to trade stocks that have momentum, because the momentum equals what? The money, the profits. That is ultimately why you should be trading. Now, you may want to trade because you want to do this for a living. You want extra money on the side. You think it's fun. You've been, going to free webinars for years. Ultimately, I think the only way that people can be successful in reference to trading and making money consistently in the market, and the consistency is the biggest point, is if you take it seriously. So my program itself, my business, the Stock Swoosh, is focused on helping people that are serious about making money and that really want to do it. My class is a price point of $7,000. So for some people, they think that's high. For me, I think it's cheap because you can learn how to trade for the rest of your life in the class, but it is a commitment to spend $7,000. And ultimately, I find that, for me as a business, I've been in business now for 10 years plus. It has benefited all my clients because I can give them the personal attention by helping them. I've been doing mentoring sessions with people. You have to be committed to doing this if you want to make money. Many people lose in the market. The reason that they lose is they have no clue what to do. You will not learn how to trade and you will not learn how to make money unless you take it seriously. You will not learn how to trade in a 1-hour seminar. You will not learn how to trade if you watch every single video I have on YouTube, which is about over 3,000 videos. You have to take this seriously if you want to do it. And I think anything that you do in life, if you take it seriously, you will be successful. I think people become frustrated because they think that when they take a trade and they make money very, very quickly, that they can do it like that day after day. It's many people that trade that lose overall over the course of a year. Make money some days. The idea is consistently making money. Monday, Tuesday, Wednesday, Thursday, Friday. Yesterday was a huge day for my group because every single trade that I called worked. So it was like 100% win ratio. Why? I had the direction right in the market. We had, the day trades that we did were profitable too. I had the direction right in the market. And that's one of the things, again, I discuss on television. The market has been challenging to read this year. The market has been challenging and choppy the last 2 months. If you are looking for a market direction in order to make money in trades, you're probably losing right now. So the key thing is to either learn how to read the market right or do specific things that you don't need the market in order to make money, that you don't need to get the market direction right to profit. And the thing I like about the gaps is that on any given day, if I find a quality gap, if I find a good gap that's going to move, I don't need the market. Now, there are days where I see what the market's going to do. Like I said, like yesterday, where we'll do a group of trades all in a row with the market, but that is not every single day, okay? So I've developed one system, and it's to trade gaps. And the idea is to make money. And again, it's called the golden gap. So let's go over one of these ones here. This was an earnings trade as well. This was CRM. This was a day trade. This was a big trade because of the fact we added to the position, which I'll show you here. But first, let's go over the daily chart and the gap. This was back last week, I guess it was now. Today's the 10th. The stock closed here, gap down. Closed up here at 4 o'clock, boom, opened in the morning. So in the pre-market here, I rated the gap. And then when it opened, we shorted it. We shorted it at 223.50. Now you could say, well, this is kind of expensive. If you wanted to do a put in this, you could have done a put instead of the day trade. Anyways, 1,200 shares was a risk of 26.40. We added, once I saw that the stock was going to continue to a bigger number, I doubled up on the position. So then the average price was 223. This had a big move. This continued actually through this move, but this was a beautiful exit, 219.65. And this you can see is in the drop here, boom. And then it bounced. Profit was $8,040. That is a day trade. If you do not have the margin accessible to take 1,200 shares of a stock at 223.50, then you take 100 shares, you take 200 shares. You do not have to take an advanced risk for something like this. Again, day trading is different than options trading in the sense that you don't need margin for options. You can open up an options account with $2,000. You would not risk the entire amount in one trade though. The other thing about consistency, which helps people, and I'll say this too, I've realized this teaching people for a long time, is that you must be consistent with your sizing, not just your strategy, but your sizing as well. So you can't risk $2,600 in one trade and then $500 in another trade, specifically with day trading. Now, I have different risks for options than for day trades because I hold options sometimes overnight. So I feel that that's warranted to take more risk. But whichever you decide, you should have the same risk for options for every options trade and the same risk for day trades for every day trade. I get this all the time. People say, oh, I need a lot of money to trade. If you go and open up an account at a retail broker, you will get 4-to-1 margin. The minimum requirement is $25,000. That would be someplace like Ameritrade. I also talk on their network as well. They have a live online network where they discuss stocks. But when you're trading with a prop firm, you can trade with a prop firm and you can get 10-to-1 margin. And the minimum balance to open up an account at some places is only $2,500. So in 10-to-1 margin, you have $25,000 in buying power. So you can day trade even too with a smaller account. Your risk is different. You can still make money trading with a small account. I had a lady yesterday, she has a small account. She does not take a large risk. She takes about one contract or 100 shares or 200 shares in the day trades. She made $4,300 yesterday. That was a great day for her because again, she did all the trades I called and they all worked. So when people say, I need this much money, I need this much money, to me, that's an excuse. You're not committed to doing it then if you think you need to wait till you have 100 grand. Many people will never have 100 grand because they will continue to trade with whatever they have and lose and lose and lose, and they dig themselves into a hole. You have to get to the point where you decide if you really want to do this. And I think that the interesting thing about the times that we're in, which is still we're in this period of COVID, is that a lot of people have now time or accessibility to day trade from home because their employer is not looking over their shoulder and they don't have to go to the office every day. A lot of people are working from home. Now, you still may have a full-time job where you have to work from home, but you can watch what's going on in your trades or watch your stocks or watch your charts while you're working from home. Whereas before, maybe you couldn't do that in an office. So you can transition while you're working from home during this COVID period, if you're still somewhere in lockdown or places are going back on lockdown now, where you can take this time to start to focus more on your trading. Half an hour, 45 minutes a day. You don't have to stare at the screen all day in order to make money, okay? And most of these trades are morning setups, okay? Sometimes I'll do things in the afternoon, but most of the trades that I do are in the morning. Why? Because the gap happens in the morning. The gap happens in the pre-market. The gap happens as soon as the open hits, boom, right at 9:30. Now, here was another one. We did big. This actually, I clipped this at 11:30 on the day that it gapped. If you go pull up the chart right now, you will see that on this day, this fell like a brick and collapsed the next day. This collapsed on Monday. Kind of wish we had done it Monday. This was a trade. It was a good trade. You could have shorted it, made 45 cents or a little bit more if you got out in the morning. Profit was 1,125. But if you look this up, again, I clipped this on the Friday of the day. This was the 4th. This fell and went red and collapsed on Monday. So it really did have more follow through. I typically like to get in and out in the morning, but this continued. I think you need to look at every trade as well, whatever your goal is for the day. If your goal is $1,000 for the day and then it starts to back up, boom, you take it. You don't have to hold every trade to a piggy target, okay? Unless you have the market with you, which in the case of yesterday, we did, okay? If you were short stocks, if you were short things. But there are days that we have the market with us and bullish trades as well. I don't think I can see people's questions here. Let me see if I can. I don't know if I can. I'll have to look at it at the end. Sorry about that. Because I know I'm talking, and I'm not sure if I can see where everything is. Anyways, oh, there. Or I think it's over there. Sorry. Okay, sorry if I missed people's questions because I didn't have the chat up. I just realized that, or I can look at them at the end. Or Danielle can send them to me, or Fausto. Anyways, why do so many people have trouble trading? Because of the fact, okay, that they don't have conviction in what to do. For example, I told you that we were in shorts, we were in options, we were in puts. We got in them, what was the day before yesterday? Yesterday was Wednesday. We got in them Tuesday. We were in shorts Monday and Tuesday, and they were short, they were down, okay? They were down. Some were up a little, some were down a little, some were flat, but people were getting worried then because the market made new highs. I had a lot of conviction, and I have conviction in what I do, but a lot of people have trouble trading because they'll go long, they'll go short. They'll short, then they'll kill it. If they take a trade and they're down, they'll kill it. Then they'll retake it in the opposite direction. Then it won't work. Then they'll reverse. Then they'll kill it. And you see how the market's been so choppy lately that you could just overall be losing if you're doing it. Taking it, killing it, flipping it around. If you're going long and short the same stock in the same direction the same day, you have zero conviction in what you're doing. So people have trouble trading because they don't know what direction they should be in. Sometimes you can take a trade and the trade will be a good trade in the right direction, but it'll be down before it goes up. I tend to be someone that takes trades whenever I see them, which could sometimes be early. This week was a good example of that. But you know what? Better to be early than late, because again, you didn't have the same profitability as we had yesterday if you took the market once it started to break late and shorted it at 2 o'clock in the afternoon. While we continue to fall into the close, that the most of the money was from the high to the low, okay? So that's how it goes. You have to have conviction. You have to know what you're doing. And this is a process. This is a process of learning. It's not like you're gonna wake up tomorrow and have 100% conviction. It is a process. It happens over time by learning my program, by trading with me, by listening to what I say, by trading, by getting green. Even if the green is $200 a day, I think the consistency of the green is what really helps people. It helps people have the conviction, okay? This was an options trade we did. This is Facebook. This fell yesterday too. Let me just show you the day that we did this. So I called this on Tuesday the 1st, 8 o'clock in the morning. You can't do options trades until the open. But I send out the letters sometimes at 6 o'clock in the morning if I see something. I'm up early, I rate the gap. We did the Facebook 280 calls. Now let me go back and show you that day. This was the day here. So this closed here, this gapped up. I rated it as a bullish gap to go long. Okay, so we did calls and then it took off like a rocket. It basically went almost to the dream target, which was 290. This is a good trade. You take it, you get out. You take it, you get out. Boom. Again, you could have been in this a second day, but this is a good trade. This is profit. If you can take an options trade just because of the fact that you have, maybe I call it till the Friday. You see here, if you would have held it till Friday, you would have lost. You have to be very careful when you're doing really anything, not just options for timing, for anything. You don't want to miss your exit. I don't know why anyone wouldn't have gotten out of this here, but anyways, here was the trade. Cost was 480. An advanced trader risk was 20 contracts, 9,600, sold at 10. You could have made $10,400. This is getting in and out in one day on the first. Now, what if you, oh, this is a mistake here. I'll have to fix this with my assistant. $960 would have been 2 contracts. Sorry about that, not 9,600. 480 is the same cost again. You could have made $1,440, risking 960. That's a good trade. Okay, that's a beautiful trade. That is more than 100% return on investment in a trade that you took in one day. Okay, really, when I'm doing options, 50% return on investment, I think is a good trade, particularly in this market, particularly in this type of choppy market. We're not getting a lot of follow through with things. We're just not. So you have to pick and choose the quality trades. Again, and actually today, we didn't do any day trades today at all. Why? Because I was aware of what happened with the gap down this morning. I was aware what was going on about what people were going to do. There wasn't any good earnings. There wasn't any good gaps on their own. I was aware of the market. I said, there's nothing good today. We're not going to do anything. So when you don't see any quality trades, then you don't do anything. Okay. And you book money when you get the good ones. Here was the market. This was the same day. This was the day the market gapped up too. This is the QQQs. Again, where's the gap? Closed here, gapped up. Boom, rallied. Could have done this as a day trade. You could have done this as a call. I called calls in it too. Again, 8 o'clock in the morning. The 302 calls we did in the Qs. Got in and out in one day. This is very reasonable. $2.25 for one. You could have taken 3 contracts, spent $675, profit was $600. That is a beautiful trade. Many people are losing. This is, you don't need to make thousands and thousands. If this is all you can afford, again, if you have a $2,500 options account, this is a trade that you can afford to take. And then you can build your account from there and you build it up. If you can risk more, 78, 75, you could have made 7,000. Again, almost 100%. But again, you're in, you're out, you're in, you're out. While this could continue, I didn't look at the price of this on Friday the 4th. It's better to get in and out of the day, book the money, get the money back in your account that you're using to risk on the trade. And then I'll call another trade because I call many, many trades. Okay. Again, sometimes I call them in a group, which I did on this particular day because I was reading the market. So anyways, getting back to what I was talking about here with conviction, you know, we're in this period of time right now where everybody is in flux with their lives because you'll be going along and everything's fine. And then you could live in a state or you could live in a different country where the government then is telling you what to do or changing your job, or you don't know if you should move or where you should live or what's happening. Everyone's worried about this thing. People are very, I found that people are very hesitant right now. And that is very deadly for your trading. Your mindset has to be almost like make a bubble. Like make a bubble for yourself. If you can't make a bubble all day, make a bubble for 30 minutes or an hour a day where you're going to trade. Just make that bubble and ignore every single thing else that's happening in your life. Everything else, the kids, the dogs, the pets, whatever, anything that's happening with the world, turn off the news and focus on what you're doing with your trading, making money. That should be your number one goal. And you should have a strategy to trade. And if you don't, that's something that you'd come and learn from me. Yes, you need $25,000 to trade at a retail brokerage account, like for example, Ameritrade. You do not need $25,000 to trade at something called a proprietary day trading account. If you don't know what that is, you can Google it or you can email me and I can refer you to one. There's many, many out there. You have to investigate and find the ones you want to go to, okay? But there are places you can trade without $25,000, yes. And in reference to doing options, you don't need $25,000. Again, I said you can open up an options account with $2,000. You do not need margin to day trade options. Now, if I call 30 options trades in a week and you don't have the money to take them all, well, you're not going to take them all. Then you take one, then you take two, then you take five. Okay. Again, the idea is if you're starting with a smaller account, and when I say small, I mean under $5,000, then you have to build it up. You take it from 5 to 10, from 10 to 20, and so on and so forth. And then you increase your risk as you go over time. I mean, everybody wishes they had, you know, $1 million account to trade. But guess what? If you don't know how to trade, you're going to lose that money anyways. So having more money doesn't necessarily mean you're going to do well. Some people have a lot of money and trade the market and they lose. I mean, all you have to do is Google and watch people doing crazy things. It happens all the time. I'm on TV many times with people that say stuff that I can't even believe they're saying this, and I know that they're wrong, and I turn out to be right, and I know those people lost when they said they did something. But what are you going to do? There's a lot of people that lose money in the market. There's rich people that lose money in the market. So don't forget that. And this is just about knowing what to do. The benefit of being a human being with a brain is that, you know, you can learn how to do this and you can grow over time and become wealthy. And all you have to do is use your brain. While it would be ideal if you had XYZ amount to start out, at the end of the day, as long as you reach your goal of being successful, the money will come over time. If someone told you that in 10 years from now, you could have $1 million cash in a trading account, would you do everything you needed to do to get it? I would think you would. But the problem is that many people don't believe that's possible. And the reason that they feel that that's not possible is because they're losing right now in the market. And they don't even have 25,000, like that gentleman just said. So they think there's no way I could ever make that kind of money. It builds on itself once you know what to do. And if you don't know what to do, you will never make it. It doesn't matter how much money you have. Okay. You have to have the knowledge. The knowledge gives you the conviction. The conviction brings the money, and that's how it goes. Okay. And one of the reasons that, you know, I'm a good mentor for people is because I can help people stabilize in that regard, because I help people with the conviction part of it. I mean, I had to talk some people off of a ledge this week who almost killed those puts before the market fell yesterday. And, you know, and I say to people, listen, if you're nervous about a trade, you have too many shares on. You risk too much. If you're worried about a trade losing, cut your risk back. You know, it's just as simple as that. You're better off taking one contract or 100 shares and letting the trade play out. If you want to kill something when it doesn't go the second that you take it, which some trades do, some trades don't. If you want to kill something after you take it, then 9 times out of 10, your risk is too big. Cut it back until you learn and understand how to hold on and wait for something to go. I'm going over several trades here. These were calls that I just talked about in the Q and Facebook. Big was a short. This is a short. This was Zoom. We did this on the day that we were long. And actually we did Zooms yesterday too, but I don't have that trade in here. This closed here, this gap down. This closed up here the night before, again, around 475-ish, and then opened in the morning here around 430 and change. And we shorted it and it fell. And we did an option. We did 2 options in it too. I have one in here. So here's a 1 minute. This closed here, gap down, fell off a cliff. Boom. You could have taken many different entries in here. Here's what we did. Again, this is expensive. You could do an option in this too. I'll go over the one we did in a minute. Entry was 428.25. Stop was 434.65. 600 shares was a $3,200 risk. So maybe you would only take 100 shares of this. Exit. This stock can move though. This is a fun stock to trade. 411.85 profit, 9,840. This is a day trade. Okay, this is a day trade. I'm going to go back here and show you what it did. It fell. It sold off. So this was a short. Now, if you have an options account, you could have done a put. So here was the put. Again, same day. This is the Zoom. I called this a little bit later, 10:30. I called the 410 strike in the Zoom, because I saw that it was going to be heading to a much larger number, okay? A 10.25 for one contract. So one contract would have cost you 10.25 and you could have made 6.75. So you could have done this really as a quick trade later in the morning, later in the day, if you didn't do the day trade, or you could have done both. So I like to do both. And I always tell people, talk about conviction. If I do a day trade and an option in the same stock on the same day, then that's good. That's an amazing gap. And there are days that we do that. Not every day, but some days. I go in the direction of the gap when the gap rates per my system. I only buy calls and I only buy puts. That's what I do. So I don't have an opinion on anything else. That's what I do. I'm playing the momentum. I'm playing the gap, just like we talked about at the beginning. Why? This is panic. This is momentum. When a stock drops $20, $30 on the day, this is selling action that came into the Zoom. We shorted it. So we shorted it and we made money and it dropped to the downside. If you bought it, this is the 20-pair moving average here in the blue line. This is the 8. If you bought it, you lost. You lost. People are buying the market today. I don't know where it's at right now. If I have time, I'll look at the market and I'll tell you what I think right now this second. But let's get through this here. But this, I only buy puts and I only buy calls. We did Apple too. This was the day, again, the market was up and this rallied. This was a nice trade. So this was, again, the morning of December 1st. Boom. For the open, called the 121 calls. Take it, get out. Boom. This was super duper cheap. $1.60. 50 contracts, 8,000, sold at 3. Boom. Almost 100% return on investment. Again, in, out. 5 contracts, risk 800, make 700. This is how you take a $2,000 account and make it a $3,000 account. And you take a $3,000 account and you make it a $4,000 account. You must take the trades and book the money. This closed here. This gapped up. Rally, boom. Went through the strike, out. Boom. And that was it. Was it done? I was on the same day. So how do I do it? What's my system? It's a checklist. That's what you learn in the class from me. My last class for the year is this weekend, December 12th and 13th. And it is a long class. It is all day Saturday, all day Sunday, 1 hour break for lunch. It's a 14-hour class where you learn my entire system. It's a 26-point rating system. That's how I pinpoint which stock I'm going to trade in what direction. And it's also how I have learned and taught myself how to so well trade the market. And I do look at the market when I'm making decisions, because if I want to do something with the market or the market's going to power trend, those could be very profitable days. And those are also days where I will hold something into the close. I prefer to trade the morning, but if I know I have the market with me, then I'll hold something a little bit longer. The meat and potatoes of what I do is the Golden Gap rating system, and it's the checklist. So you can make money trading gaps with day trades or options. Using my system, it's called the Golden Gap. The rating system's the same. It's just how you're placing the trades. And the system is based on institutional money. It's based on big positions, big traders, institutional money, hedge funds. And again, you know, very often, if you're following news or fundamentals, you're late to the party for getting moves. The focus for me is on the institutional money. I'm reading it in the gap. Are they going to buy it or are they going to sell it in the gap? Yesterday, we did Zoom. Okay, we did the Zoom. We did puts in the Zoom. We did a day trade in the Zoom. This fell again. Closed here, gap down, fell off a planet. This was a beautiful trade. It's actually opened lower this morning too. You could have still been in the puts and got out of them today into the open. They expire tomorrow. So again, this is selling. So we bought puts and we shorted that too, but the focus was the gap and the focus on the volatility, okay? So again, where are you gonna get pain? With momentum. And how is that created? With the volatility. And then how do you make a lot of money? With share size. So you just plop on the size, and that's how you can make $10,000, $20,000 in one day, even trading. In one trade or several trades, but you have to get to the point where you understand what you're doing, or you can't risk the money. I mean, why would you risk several $1,000s or even $500 if you don't know what you're doing? I find that strange. People who are willing to just willy-nilly risk money in the market, and they have no clue what they're doing. They have no strategy, don't know what they're doing, don't know why they're doing it. They'll turn on the television, hear somebody say something and do a trade, and they don't know why they're doing it. You can't be like that. You have to look at every dollar that you risk or spend in the market as serious business. And again, if you take it seriously, then you're going to have a higher percentage chance to make it. And I know it's fun making money, but you have to be a little bit patient with yourself. I say chunk it out. Make a goal for the week. Like today, we didn't do any trades, but we really, all of us have made our goal for the week already. I'm sure we'll do something tomorrow. There's a lot of things out tonight. If you want to trial the trading room, you can email me at melissa@thestockswoosh.com. You can come in for one day tomorrow before the class, but the class is this weekend. You've got to chunk it out. You've got to focus on one thing. And in this particular environment right now that we're in 2020, you know, I've just heard so many stories from so many people. Don't wait to the last minute till things get bad for you that you decide you want to do something different with your life. If you know you're not happy with your job, or you know you're not happy with the money that you're making trading, or what you're doing for a living, don't wait till it gets so bad that you can't do anything else. Make a move now. Start to think about your future. Plan ahead. People used to plan ahead years ago. Now we live in a society and a culture where everything is me, and now, and yesterday. And no wonder people are suffering. Okay. Plan ahead, plan for the future, make an investment in yourself. Trading and learning and doing a class like mine is an investment in your future. That's what it is. Well, while you can make the $7,000 from my class back in one trade or one day or 1 week, depending on how much you're risking, that should not be your goal. Your goal should be to learn how to do it for the rest of your life, similar to what I'm doing. So I understand that risking money can be hard for people, but everything has a cost. Everything has a cost. Right now I'm in New York. I love New York. I've been stayed here through the whole entire year of 2020. Things in New York are worse probably than they are anywhere. And the whole entire city is just a mess. It's just such a mess. I can't even go on about it. I could talk about it all day. I'm sticking through it. I'm probably going to stay. I'm probably going to stick it out. There will be a reward for people that are willing to do that financially, real estate wise, opportunities, because many people can't stick this out. You know, and so everything has a cost. Everything has a sacrifice. If you think about it, if you have goals for the future and things you want to do, your dreams are achievable with money, time, and hard work. A lot of people are willing to put in the time and work, but they don't want to spend the money. A lot of people are cheap. Well, you're not going to get anywhere that way. Some of the most successful people in the world put time and investment and money into things, and they build businesses. And I understand everybody is impatient, but it just doesn't work that way. You have to be somewhat realistic with your goals. But if you are, you can get there. And I'm definitely helping people do it. And it does become easier over time, because as you make money, your conviction grows. And then your confidence grows. You can say conviction, you can say confidence. It's really all the same thing, you know, together in a ball. So day trading is something that I do. You can do options, you can do day trades. It's all one strategy. Let me see here if I have any. Something about the close. How much time does it take to identify? Well, how much time I don't know what you mean by the end of the close. Again, I wait till the morning in the pre-market. How much time does it take to rate the gaps? Well, I do it very quickly. I could do it in, you know, less than 5 minutes. If you're new, I'd say get up early, take your time. It might take you 10 minutes to rate one, but I'm not rating 1,000 things every day. I look at something, I make a small watch list, and then I rate them. And I would say start to get organized by 8 o'clock, 8:30 in the morning. Market opens at 9:30. You can't sit down at 9:15 and then expect to figure out what you're doing. If you're in the live trading with me, I'm telling you what I like every day. That's the benefit of being there. And then I'm calling the trades live in the room. I'm giving you the entries and the exits and the stop in the room live, like all the ones we talked about here today. Okay, and like I said, today we didn't do anything. And if I have time here at the end, I think I might, I'll show you what I saw in the market. But anyways, a big part of becoming successful is really just getting down and I say getting grounded. Okay. The best thing, like right now, you got to get grounded. And again, I appear on news TV, but if you turn on the television right now on any given channel, I mean, you can really get in a negative space about what's happening in the world, whether it's politics, whether it's COVID. Just, you have to be so grounded right now, because what matters is your life and you. And if you're not positive and focused on what you're doing, you can very easily slip into despair right now with what's happening in the world. Don't go there, okay? Be aware of what's happening in the world, but you have to be very grounded in the choices that you're making. I had a person that was up money the other day in a trade. She was up $800. She didn't get out. It moved against her really quickly. I said, the trade's still good. I'm still in it. I still like it. I didn't think it was up enough to get out. But I said, if I was you, I probably would have got out and booked the 800, because her goal for the week was only $1,500. So she could have made half her goal for the week in one trade, and she didn't get out of it. And then she panicked, and then she wanted to kill it when it was up and down. It was an options trade. And then it went the next day and went huge. But I said, listen, you have to get in touch with yourself. If $800 is $800. If that's half your goal for the week, you should have gotten out. That's it. Boom. Everybody is in a different place financially. $800 to somebody is their rent right now. It's food on the table or it's not. And everyone keeps talking about Congress and the stimulus. Steve Mnuchin said something today, and then the market was rallying back. I'm telling you, I would not bet my life on the fact they're going to pass a stimulus bill in the next week before they leave for the year. I really don't think that's going to happen. People are betting on that money. You have to look out for yourself. You have to think about your own goals. You have to stay grounded. And remember, just learning is everything. Let me just see if there's any other questions. Okay. All right. So, yes. So day trading is what I do. The rating system, what are you going to learn? It teaches you a high probability of directional bias for the entire trading day. Big move of the day, early confirmation of the bias on the move between 9:30 and 10, and precise entries with follow through and a good risk to reward target potential. So again, I'm trying to get in the trades in the morning. Even if I hold it, I'm trying to get in it. We talked about this. We talked about chunking it out. My class is called the Golden Gap System. It's a 26-point professional bearish gap rating system. The bullish class is in January. The bearish class is this weekend. The purpose of the system is to help you evaluate which gap to trade each morning using the checklist. This checklist tells you what to trade, when, and in what direction. The 26-point checklist predicts directional bias and a stop. And that is the reason I'm successful. I'm very good at what I do. I'm very, very blessed. I have a skill set and a talent. And if you come and learn from me, you will be blessed to listen to what I say every day. And while every trade that I take does not work, so many of them do. And I have something called a sixth sense. It's an intuition. For the trades like that we did yesterday, it was based on the gap rating system, but I also have a high intuition where I know sometimes that something's going to happen before it does. I really saw that also with the COVID. I want to say it was March. I'll pull up a chart. It was early in March before it happened. And we were in puts before that gap down happened in the market in the lockdown. The thing is that when you do something for a very, 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 very long time, every single day, thousands and thousands of hours, you do develop a sixth sense. I've been trading since 2008 and have not done anything but gaps. I developed my own system over 3 years. It's been 12 years going on 13. This is all that I do. It's all I will ever do. If you flip flop around with doing many, many different things, you're never going to get good at one thing. And it's going to be really hard for you to make money, whether it's $100 or $1,000 or $1 million. You're never going to get there if you flip around. You must get good at this. There's so many people that want to make money in the market, and so many people are drawn in by the greed factor. You can want money. I mean, money is my goal, but there's a difference between money and greed. And again, that comes back down to the grounding part of it, where you have to set your sights on what you want to do and be serious about it too. So one strategy is all you need to be successful in the market. You do not need a general overall broad base of view to make money. Again, very often the fundamentals are after the fact. And if you can learn how to read institutional money and price patterns and gaps, you don't need to do anything else. And really, people have had a very good year with me. But it's been an active year. We'll see what happens next year. I teach a class. It's called the Golden Gap Course. It's this weekend, 12th and 13th, 9 to 5 Eastern time. Class is online. You can be anywhere in the world and take it. It's $69.99 US. You must email me to sign up. The deadline is not November 15th. Again, that's another mistake. I'll have to talk to my assistant. The deadline's tomorrow. So you can sign up by December 11th. So remember, education is a gift to yourself. And if you want to just sign up for the options newsletter, that's $69.99 a year. You won't learn the system. You get the options trades. You would have gotten the Apple one, the Qs, the Zoom. It's 1 year subscription. Trades are emailed to you. You take them when you get the letter. And I'm doing a special. I think Fausto has this. It's trading room free for 1 year if you sign up for the class this weekend by tomorrow, which is a great deal. Now, let me just pull up my charts really quickly here and see. Can you see anything here? Or does it come up? My charts come up? The last 5 minutes here, I'll just give you. Can you see it or not? Shoot. You can? Let me say stop share. See if this works. Can you see it now? Does that work? I'll just briefly give you this in the last 2 minutes here, and then I'll let everybody go and Fausto can get on. So when I got up this morning, we gapped down today, but we didn't do any day trades because I said, well, we're going to fall, we're lower, but I don't know where we hold. And that's the situation. And why? Because the market is in an uptrend. Here's the market. I'm just going to look at the cues really quickly here for you. So this is the market. It's strong. It made new highs yesterday or the other day or whatever. The SPY made new highs. This is strong. So when you have something in an uptrend and a strong trend, which this is, again, I short in uptrends, I short in downtrends, I do it all. But ultimately, when you have something like this, you don't know where it's going to hold. Why? There really is no resistance in this. So even though we're lower, you don't know where we're going to hold. Why? Because there's no resistance. Why? Because we're in an uptrend, because we're strong. But I do think the market temporarily right now is not going to continue higher for many, many reasons, based on the gaps, based on the buying, based on the selling, based on fundamental reasons, COVID stimulus, whatever you want to talk about. But today, there really wasn't any play because I'm not going to go long this. And then I'm also not going to short this because I didn't know where we'd hold. Now it's 12:55. Will we sell up into the close? We could. Where will we gap tomorrow morning? I don't know. But there are people here that have got sucked in today that are going long this market into support. Yes, it's strong. Yes, it's in an uptrend, but I don't think we have any follow through here. I would be shocked if we have follow through and go over the highs tomorrow. I don't think that's going to happen. So today was a day to just rest, stay silent, take it easy, wait for the next setup, which could happen tomorrow morning or possibly on Monday. Don't forget, there's really only, I'd say 8, 9, 10 good trading days left here before the end of the year, because Christmas is Christmas, I think, is Friday. So then people are going to leave on Thursday. So you have all next week and then 3 days after that. So you really got to be careful into this holiday period what you do. And it was no surprise to me here that we pushed back today, but I would not be long this, and I wouldn't be surprised if we fall, and we're trying to fall right now. So it'll be interesting to see where we close today. I'll try to do a video and put it on YouTube tonight if you want to go subscribe to YouTube. Any questions here? Let me just look up. Thank you. Thanks for having me, everybody. Stay safe wherever you are in the country and in the world. And have a great holiday. Thanks, Fausto, for having me. Happy holidays to everybody.
Melissa, thanks for coming. And that was a great presentation. Sometimes it's weird. I feel like I was talking myself. Everything that you were saying was so similar. And, and I know you living here locally, looking forward to meeting up with you. This whole thing with COVID just making things so difficult. But that was a unbelievable presentation. I hope everybody learned a lot. And I know we have a lot of students here of Cyber Trading University, and they basically probably said, is that, very similar to what we talk. And you know what? Great traders think alike, and that's what it's all about. So, anyway, I'm going to basically give you guys about a minute or two. I'm going to pick up in about 2 minutes and give you guys time to look over Melissa's content, register for it. And then, like I said, I'm going to pick up and I'm going to teach you how to shadow the dominating brokerage firm. So don't go anywhere, guys. We'll be back in less than 2 minutes. All right. So in the meantime, as we're waiting for some people not going to fill up their coffees, can everyone just tell me, where's everybody from? Just want to make sure I know where everybody's logged in from. Just go through the chat. All right. New Hampshire. All right. Just while we're sitting there and waiting for everyone to kind of just jump in there. There we go. It's going to put up the webcam. So he goes, I always feel like when you're doing it, when you're doing a video, it just seems more personal, right? That's all. Where's everybody logged in from? Okay. We got Miami. We got from America, Sonoma. There you go. Toronto. Love it. Beautiful. Jacksonville, Florida. Like Melissa said, it's not a bad day today. We actually had a little bit of a mini little snow shower yesterday. I was so excited. Kind of bring the spirit of, the holidays and Christmas and everything else. Looking great. Oh, look at that. You see John's from Hawaii. That's where I got to end up being. Unfortunately, my wife doesn't like to fly very far, so still trying to get out there. Alberta steak, the best. All right, guys. So let's get started and let's get the ball rolling. First of all, my name is Fausto Pugliese, president, founder of Cyber Trading University. I hope you guys really enjoyed the event that we're doing as of right now regarding our Cyber Expo. We had some great speakers, and right after I go, I'm having another great presenter, a very good friend of mine, Hubert Centers, and looking forward to hear him too. So, and the big thing that you guys should be learning is that we all think the same way. All right. And, I obviously, when you heard Melissa talking about that, listen, you can't be cheap with yourself. You have to make an investment in yourself, and I just want to add to that when you get somebody involved in your life and you want to take something very seriously, that's how it makes it better. I always kind of make a comment that we've all probably been on the diet, right? We've all been on a diet. And when you get to the 17th diet, all right, 18, whatever it is, the 20th, whatever it is, you know how you're going to lose weight? You know how it's all going to come to fruition after you did it and failed and failed and failed, hire a personal trainer. Have somebody involved in your life. Yeah, they're not cheap, but you know what? When he comes knocking on your door and you want to blow it off, guess what? He's there. Just surround yourself with great traders and a great team. And that's what you basically learn. So I'm going to get right into it because I want to talk a little bit more about how to follow the smart money and how it's being exposed. How do I know this? Like Melissa, same thing. I live here in New York. I live on Long Island. We heard of a little funny little commentary where someone says, "Oh, you're playing Billy Joel." Yeah, well, Billy Joel, he's obviously an icon here on Long Island. He actually doesn't live too far from our main office, believe it or not. And just to, who doesn't like Billy Joel, right? But anyway, this is the financial capital of the world. This is what we do here all day. And we surround ourselves with great traders. I mean, right across the street, I got several traders on that deal for mutual funds and on the floor of the exchange. I mean, this is the financial capital. So you know what? This is where it all starts. And if you look at it, we pretty much all think the same thing. All right. We're not somebody that was a contractor, and all of a sudden says, "Oh, I discovered trading. I want to share my methodology with you." We all work for trading firms, and we've learned from the best. And that's what you guys have to realize. You have to surround yourself with good traders to make you very successful. Now, what we're about to learn today, and by the way, we have other instructors here at Cyber Trading University. So as you guys ask some questions, they're going to answer the questions too. I'll try to answer some questions as we move forward, but feel free. If you have a question, it will be answered. All right. So what we're going to learn. So basically, the whole idea we're going to be learning here at Cyber Trading University, what I'm going to talk about for the next 45 minutes, I'm going to talk about how we find these markets, who's actually making them move. How to read charts very correctly, because a lot of people, believe it or not, are reading them backwards. I'm also going to talk about how these big gap fills, volume, how it gets executed. Okay. And this is what, if you heard Melissa saying the same thing, you're not going to learn how to trade in an hour, but I'm definitely going to make you realize that you've been trading blind and you basically have to learn from somewhere. And also, I have thousands of hours for being online for 25 years. Okay. I got thousands of hours. And honestly, you're not going to watch them. You need somebody there to kind of be involved in your life and push you how to do it. But before I get into trading, ladies and gentlemen, and get into it, just a little history about what I've done over the years. I'm also, been featured on NASDAQ talking about what I'm going to talk about today, talking about level 3 and level 4. I founded Cyber Trading University back in 1995. Just tell you how I got into it. I was actually a prop trader, which if you heard Melissa talking about them. So I started working for somebody. I didn't have money back then. I did. I blew it all because of stupidity. I thought I knew how to trade. So I'm like, what do I need someone to teach me? I'll do it myself. Yeah, I blew up 2 accounts and that really didn't work out too well for me. So unfortunately, I had to work for somebody, use their money. But the bad thing is I had to split the profits. The good thing was they told me everything I've learned. And you know what? I've learned the most important thing that most of you are going to learn today. I should have never made my first trade. I was a complete moron. Who am I to dictate that I know what the stock is doing? And that's what you're going to see. So I'm going to tell you how the exchange works and basically a very simple way of looking at it. Okay. And then at the end of this presentation, I'm going to invite every single one of you to come join me in my trading room so you can see if this stuff really does work. Okay. And believe me, don't look at me because I don't have an ego. I don't go around bragging how much money I made and pound my chest and show off my nice cars and try to be the next Wolf of Wall Street, or all that stuff. That to me, that's an ego. We're not looking for that type of traders. We're looking for serious traders that, we don't brag. We go to work, we make our money, and we get to enjoy life. And we'll just talk about how we change everyone's lives. But I started the company back in 1995 because this is what happened. I actually was such a great trader that, I hated splitting the profit. So I said, how could I go on my own? And I didn't want to open up a brokerage firm. So I started one of the first schools in today's industry. And, but the only way you could be successful is you have to teach people how to trade like you. So to trade like you, it's a lot of work. It's not easy. Like, Melissa was saying earlier, what she's charging $7,000 for a class. I mean, listen, there are people who spend $50,000, $100,000, but you're not going to learn spending $29.99. Okay. If you're that person, please log out. We're looking for serious. Listen, college doesn't cost $20 to go to. Okay. I mean, was it $70,000, a year? It's so funny. I hate when they talk about college, how cheap it is. It's not that cheap. What about dorm fees, everything else? It's costing me over $250,000 to send my kid to school. Okay. And hopefully he does learn something out of it. Maybe, more or less, how did you take responsibility? But you know what? We do it. We did it. You did it. Everything else. Well, guess what? What's going to change now? We always are out there learning. So this is what I'm looking to do. I'm looking to teach you guys how to trade, exactly what we're doing, and hopefully you're all going to be able to join me. By the way, this is a great photo. I always like to share this. Bunch of kids tormenting Wall Street. That actually was me, believe it or not. It was somebody that was in my trading industry that did it. You know what's so cool about this picture? I want you to look at the monitor. Look at that monitor. It's a 15-inch, what do you call it? Anchor. I mean, that thing is like, remember those monitors? Those things weigh like a ton. Look at the screen. How many charts do you see on that screen? What do you see? We used to make money with a 15-inch monitor. You get people that trade with 6 monitors, they still can't make money. You know what I mean? But what I'll have to show you is what's on that screen. That screen right there is what we used to use to trade with. So anyway, been married for over 25 years. I always like to talk about my family because I got 2 families. I got my trading family I'm with every day, and I have my everyday family. And we all know how hard it is to keep a family because we know divorce is very expensive. So you want to make sure you do your homework, your research, knowing that you have a very good relationship with your mentors, with your trainers. Because listen, every one of you are going to need more than one mentor. Okay. And that's the way things work out. So question, who really trained you? Okay. And I love this baby picture because it really comes down to that. Who really what really makes you qualified to go trade your money? Okay. Because you watched a couple of YouTube videos, because you're getting a newsletter. Listen, would you trust somebody that never went to med school to work on your loved ones? I don't think so. Okay. Trading is really not that complicated. I'm going to teach you something, and I think you all should write this down. What we teach at Cyber Trade University is we trade less. I mean, we buy less, but we trade more. What that means is this: you don't got to trade a lot of shares. Okay. The more shares you trade, the more risky it gets. But if you trade more often, you'll end up doing better when it comes to trading because it's not like demo mode. You got to be in the game. You got to constantly be there. This is a routine. This is your job. This is your future. So end of the day, you have to learn before you could earn. That's what it comes down to it. You want to learn from the right people. You got to surround yourself with the right people. That's a big mistake a lot of people make. Okay. They go out there, they get sold on these YouTube commercials. By the way, be careful of those YouTube videos, those infomercials you see on there, because great traders don't need to do that. Okay. Look at some doctors out there. How many doctors that you had to go out and do your research to find them? Did that great doctor have to go out there and advertise and spend millions of dollars on YouTube and Google ads? No, they don't need it. Okay. And great traders, we're not looking to trade the world. All right. We're looking to trade people that we could trade with. We could make money together. That's really what it comes down to it. So I really want to leave that off to make you guys think about that before you make your next investment. So let's talk about some stock right here that we traded. How on earth would something you would know to buy at 32 and sell at 36? Here's a stock, William Ireland, one of our traders, which, there's a day trade. A stock 930 goes from 32 to 36 in what, about an hour and a half? Could anybody tell me right now, and I know I keep talking, can anybody tell me what made that stock go up? Can anybody answer that? Let me see how you guys answer. What made that? How in the hell did that stock go up? What drove that stock go up? Okay, we got one person that nailed it. Momentum. Okay, I'm going to use some different words. I'm not going to answer what everyone else answered. An indicator. Oh, God. Demand. Okay. There's only one word that explains it. Buyers. Buyers are what draw that thing up there. Yes, it is a demand, but what makes a demand? Buyers. Okay. 2 words that you have to learn. I think you should write these 2 words down right now. Okay. There's 2 things you're going to learn when you're done with me today. Buyers, sellers. No, we don't teach support. We don't teach resistance, because support and resistance levels get broken all the time. A support level gets built by what? A buyer. A resistance level gets stopped out by sellers. You could sit there and you could focus on the past. I don't do that. My traders don't do that. We focus on the future. We want to see where the street has their orders out there. And that's how you basically do that. Because when you have a stock like JMIA at 930 and the stock goes from 31 to 36, what, like, how would you have known that? Buyers drove it up. So it all comes down to this. Got to have a game plan. You got to have a game plan when you get into a trade. Okay. Now, I don't know what your game plan is, but I can tell you what we teach our game plan. Our game plan is, I'm going to show you right now something that is going to probably be the most disturbing thing that you probably going to about to realize. And if you take it and you've seen me before, you hear me say it all over again. And sometimes, it takes about, they say it takes about 5 to 7 times before something really sticks in someone's head. When you keep hearing it over and over again. I know a lot of you out there have been going to these webinars and you keep listening to all these people, but you know what? If it's your first time, that's great. It might be your 7th time. He says, enough's enough. The bottom line is this. You got to have a game plan. A game plan is this. You can't think you know what's going on in the market. You just got to follow the market. And you guys see what they're doing. So at the end of the day, I don't care what I trade. I don't want to know what I trade. I don't want to have any animosity against these stocks. I might not believe what they stand for. Okay. I don't want to be called a racist against a stock. I don't do anything. At the end of the day, guess what? We're all the same party. Okay. And we are the party of traders. And the party of traders is going out there and risking the least amount of money with the high amount of reward. That's where it comes down to it. You're just here to do things, make money. That's it. That's what trading is, a business. And and you'll see Hubert talk about it, and you see what Melissa already said about it. When it comes to trading, you just got to know where to look. And you got to have people that are looking with you, look at the same thing, and you're trading with them. So what I do is I focus on trading something called the big percentage gainers and losers. Okay. Like, for example, BMRA up almost 500%. Are you kidding me? 500%. WTRRH up 240%. Are you kidding me? Blue Apron up 100. This is the day. As a trader, I don't care about making 400%. I'll be happy making 20% on that trade. You don't have to make a lot of money to be a successful trader. It's all about being consistent. So what is your strategy, Fausto? Like I mentioned, we follow the buyers and we follow the sellers. So there are a couple of vehicles that we look at, and this is how we do this. Whenever you look and you want to find out and you want to get a quote on the stock, most of us are looking at something that's called level 1. Level 1 is basically telling us what the stock is trading at. If there's buyers, just basically what is actually the stock trading at this exact moment. Now, back in the 90s, 80s, the only way you can get this information is call your stockbroker, or maybe you get lucky it was on the ticker on the bottom of the TV station. But other than that, that is level 1 quotes. Okay. It's free. It's real time. It's worthless. Doesn't do anything for me. I don't know what it does other than tells me, what the price is trading at. Now, there's something that came out that was called NASDAQ level 2. Level 2 back then, we used to pay a lot of money for it. Now it's free. You know why it's free? Because it's worthless. It doesn't do anything for you. What does it basically tell me? The best bid and the best offer, big deal. I could be a buyer at 1482 for 100 shares, but I might be a 100,000 share buyer at 1479. You're not going to see that level 2. So I want to ask everybody a very important question, and you all should be able to answer this. What is it worth to you if I was able to show you right now where I could show you where 70% of where the buyers and sellers are? What is that worth? Is that worth anything to you? I mean, think about it. What are you using to find the orders? You just all agree with me. Things get driven by buyers and sellers. What's that worth? It's priceless. A lot. I can't even put a price tag on it. That's what everyone's basically coming across. And what about you, John? What about you, Mike? What about you, Bill? I haven't heard from you guys. Don't be embarrassed. Don't be shy. No one's going to yell at you. Abe, what about you? Unlimited. Well, how about this? When I started, okay, 22 years old when I started, when I came to my brokerage firm, I had to split the profits. And then they were running a business in my business. They said, okay, get this data is going to cost you about $1,000 a month. I'm like, you're asking a 22-year-old to come up with $1,000 25 years ago? That's like paying $3,000 today. Okay. And they said, well, don't you want to make, you want to make money or you don't want to make money? I said, of course I want to make money. Well, what do you think? You think rent's free? You really think there's free lunches that exist? You really think that when you're going out to dinner tonight, somebody's not picking up the check? Oh, dinner was great last night. And you go to your wife or your husband, like, oh, how much? Oh, it was great. It was free. You mean it's free? Nothing's free. Who picked up the tab? If you just go out to dinner and it's all entitlements? No, someone paid for it. So that's what the whole point about trading. If you're not going to make an investment, you're wasting your time. Now, it doesn't cost $1,000. It actually costs $15 a month, and you can get it through the exchange. So I don't work for the exchange. I'm just telling you, and this is why NASDAQ always invited me to come out there. They said, and actually, you could see the video on our homepage or our website. They want you to understand how the market works. It's amazing how some people just don't understand how the market even works. But this is how it works. I'm going to teach you how it works, okay? So it's called NASDAQ Total View. So you know what? I want to do a quick poll. I just want to ask everybody a question here. Do you guys have level 3? So let me just ask that here. I'm going to do a quick poll. I'm just going to pop that up here. Let me say you guys answer this question, okay? Just come across. All right. I'm going to share the results so everybody knows exactly where they are. One, you're not aware of it? That's okay. That's great. So click no. By the way, if you say you're not sure, that's a trick question. I mean, if you know or you don't. So anyway, I'll take that as a no. All right. So it looks like most of you are exhausted and couldn't fill it out, but we do got a lot of you that did. So let's go out there and share the results so you could see where you actually fit. Now, remember, what you're about to see is really going to make you fall off your chair, because when I was told it was $1,000 a month, let me tell you something. I thought that was cheap back then. I'm like, like Melissa said, about Manhattan. People spend almost, $1,000 a square foot just to be in Times Square. I'm like, $1,000. I pay $1,000 in my town and I get 10,000 square feet. Yeah, it's all about real estate, real estate, real estate. Look, I'm sorry. Location, 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 right? You don't have, well, now you don't, but you don't have like 4 million people walking across your storefront every day. It's part of doing business. So I'm going to talk about what total view is and how we use it. All right. So here we are. Let me get my little pointer out. Hold on. Let me get my little crayon here so you guys can follow along. Okay. So here are your buyers and here are your sellers. Now, what you're looking at, it's the raw data of all the orders around the world that are trading on the NASDAQ market. Okay, this is actually called an ECN. So you got the orders out here. These are how many orders, and these orders make up that amount of shares at that price. Now, what you're looking at, whoever wants to buy the stock for the most amount of money is up on top. Whoever wants to buy for less money is down here at the bottom. And you could see how those numbers actually change substantially as in shares go, because somebody might be a big buyer at one price and someone might be a less buyer at a different price. But the way it works is they're all being aggregated in one order. So that's why you'll see like there's 11 orders out here that make up 2,870 shares, and they all want to buy the stock at $14.50. So what I'm about to show you is, you always want to have a game plan, like, okay, where's a good buy? Where's a good sell? Well, the only way where they know where's a good buy and good sell is where the orders are. And that's the power of level 3. So let me clear this out and let me change the slide and show you how he utilizes data. So does everybody here know how to read a chart? Does everybody here know how to read a chart? Okay, guess what? 80% of you are reading them backwards, so please don't be insulted, okay? But I'm going to show you how to keep it very simple. We're looking at a stock, PLTR, which was a pretty good, fun day trading stock. Stock had a really nice rally. And if you look right here, the stock literally went from $28 all the way down, and it stopped at $24.50. Now, you could see it like, oh, well, it's just making a higher low. It went up, came back down, broke the pre, went up, came back down, went up, came back down. Eventually, you didn't want to go lower anymore. It specifically stopped right at 24. And like, why did it stop at why did it go to 20? Why did it go to 23? Why 24.50? Well, if you look at the orders on the exchange, you'll notice that there was a 58,000 shares. There are 21 different orders out there looking to buy it at 24.50. Do you really think your 100 shares is going to make that stock go up? Do you really think that some Bollinger Band is going to make that stock go up, or an RSI or Fibonacci? No. Where it comes down to it is that if you're a day trader, you have to follow the money. And right there, clear as day, the only reason why that stock bounced there is because there was a lot of buyers out there. I mean, who are you going to trust? The guy who wants to buy 200 shares? Give me a break. The guy who buys 100 shares? Come on. Okay, 58,000 is what we call a pretty substantial amount of orders that are looking to buy at that price. And by the way, that is what we call here at CyberTrade University an iceberg order. Okay. Okay, question. Do you know if trades are equities, but it should work with options? Well, listen, if you want to be a good options trader, how the hell do you know what option to trade if you don't even know how to trade the stock? Do you know it's that much? It's almost 5 times harder to trade an option than just to trade the stock. The stock is just black and white. An option is green, blue, red, orange, green, black, white, purple, fluorescent. There's so many ways of trading options. This is just black and white. And you know what? If you want to be a good options trader, you damn well better learn how to trade the stock first. So if you can't make money trading the stock, you'll never make money trading options. It's just too damn, because everybody has their own style and there's so many ways of trading it. It's just better just dealing with black and white. Juan's laughing on that. You're more than welcome, Juan. Well, listen, it's, you know what? You hear from the horse's mouth. Now, here's another stock example, Workhorse, another stock that we trading, great day trading stock. Stock went from 1850, went all the way up till 12 o'clock. You have plenty of time to buy it. And then eventually it didn't want to go up anymore. It stopped at 24. And you know what? If you didn't see it coming, the stock went all the way down to 2050. And you know what? Have you been in stock and all of a sudden it just drops on you like that? And you're like, oh my God, why didn't I sell it? Well, the reason why is because there were 54,000 shares. Listen, there are sellers everywhere, right? Remember, what makes a resistance level? Sellers. Why are you looking at the past? Look at the future. Look at what's out there. That's what you're looking at, the future. This is, I don't want to use a crystal ball because that's probably illegal to say that, but just look at the orders. Look at the damn orders, don't you? That's the reason why I went down. Don't listen to what you heard on TV or you heard from somebody, on a newsletter. It is people want to get out. That's where the institutions want to get out. So let's have a little fun here. Okay, everybody ready? I'm gonna do a quick. We're gonna do a quick little Q&A, a quick poll here. Can you guys tell me now, after what I've taught you? Could you tell me, is this stock going up or going down? Really quick, you should be able to answer that question. Up or down? Jacob says 100% down. Well, then click the down button. By the way, if you cannot answer this question, don't mind me being very brash, but you should quit trading right now. If you have to think about it, you should be definitely quitting right now. You're wasting your time trading. This is like kindergarten. Actually, this is like kindergarten stuff. Okay. All right. So let me share the results. Okay. First of all, you always get people that say it's going up. Now, I don't know if you're just being, sarcastic or whatever, but if you really think the stock is going up, you should definitely quit trading also. I have no idea why you even thought it was going up. I would love to hear the explanation, but you had about 5% of you that say it's going to go up, 95% is going to go down. So listen, the 95%, congratulations, you just graduated to the next level. The ones that said was going to go up, I hate to say it, you should quit trading right now. The ones that did not answer, you definitely should quit right now. Okay. That's okay. That's all right. Now, let's go to the first grade. You just graduated from kindergarten. Now you're going to the first grade. Okay. Now, the first grade question is this: what is going to make this stock go up? Can everyone answer that question? What is going to make this stock to go up? For all the people that said it was going down. What a coincidence. Congratulations. You just graduated the first grade. That's right. Buyers. Now let's go to the second grade. Do you see buyers out there? No. Congratulations. Let's go to the third grade. What do we need for the stock to go up? How are we going to see where those buyers are? You need level 3. You need to see those orders. Very good, Juan. Okay. So let's go change the slide. Okay. Forget about all that fancy windows and execution systems and those seat seekers and those algos. Let's just go right to the data. Let's go right to NASDAQ. Okay. So we're looking at sell. We looked at the charts going down. Now, you just said we need to know where the buyers are. So we're going to go look on the buy section. And, coincidental, there's about 259 orders out there that make up at $9. You're talking there's 102,000 shares. Now, you have to ask yourself a question. Who are you to dictate that this stock is going to go lower than 9? It could happen. Anything can happen, right? But as of right now, let's just follow the science, okay? I'm going to use that word because the coronavirus thing. Everybody's talking about the science. Let's just follow the science. There's 100,000 shares out there. Why would you even... And there's 250 orders around the world that make up that order. Why would you even think twice that, oh, that's fake, or, you know what? I'm better than that guy. Who are you? Who are you to question that? Okay? Because guess what? When the stock hit that $9, the thing shot right back up. And you could have bought it at 9. It went, look at that. In less than 15 minutes, it went up literally almost 80 cents. 80 cents on 1,000 shares is $800. I mean, here, 1,000 shares, stock went up $1.20 in an hour. It's $1,200. You know what $1,200 is? Do that every single day. You're talking $250,000 salary. Where are you going to make that? Sitting at home. Okay. Where are you going to make that? Oh, I know where. Trading the market. Okay. Now, listen, you didn't have to make $1,200. Hell, you could have just made $200. $200 a day is at least a $50,000 salary. But you know what? You didn't have to buy it at $9.40. You could have wait. You could wait what the buyers are and see what happened. It's that simple. It's not that complicated. Okay? That's where it comes down to it. All right. Let's do one more. Let's look at this stock right here. Where do you think the resistance level in Uber is? Let's see how you guys answer this question. All right. Just go out and put in the chat. Jacob's putting a number with a question mark. I like that one. That's pretty cool. Come on, guys, really quick. Remember, what makes resistance levels? Let's go back to the first grade. Okay. Sellers. Don't mind me talking, I'm just being very to the point because some people make it just so complicated and they think more than they react. You don't have to you don't have to overthink things. Just go right to the point. Okay. Resistance. Well, what makes a resistance? It's got to be sellers, right? Where they are, they're on the right. Work your way down. Oh, what a coincidence. You got a 219,000 share seller at 51.40, and you got another 63,000 share seller, literally about 10 cents away from him. Who do you think I'm going to be more scared of? The guy that's selling 200 shares, 1,000 shares, 1,300, or the 200,000? Okay. I mean, who are you to question that you think the stock is going to go higher? Because guess what? When you look at this chart, it doesn't really say that. This looks like, oh wow, Uber is breaking higher highs. It's got a bull flag. It's got, you know, it's got 5 candlesticks on the green versus 1 towards the red. Yeah, you know, I hear these people talking about, like, it's like, wow, they really know how to sell this, how, you know, how, I hate to use the word sexy, but like the beauty of a chart, like how gorgeous, like it's just like, wow, look at that. It's like, you know what? I only use colors because, you know, because some people like it, but I just look at black and white. That's all it is, because it is technically black or white. And if you're thinking about it, the more colors you look at, the more confused you're going to get. Because at the end of the day, guess what? From 11 o'clock, look what happened. It hit it, went down. 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 So like you could sit there like, I don't understand. From 11 o'clock, I bought the stock, and it's what? Now it's 2 o'clock in the afternoon. After 3 hours, it's not going anywhere. Why is that? Why? Well, what are you looking at? What are you looking at? You just got to look at the orders. That's it. It's as simple as that. So here at Cyber Trade University, what we do is we call them iceberg orders. And, you know, if you want to know more about what an iceberg order is, basically, I came up with that word after watching the movie Titanic. I don't know if you guys saw it, very sad movie. But you know what was the story about the whole Titanic? Just the bottom line fact is, people were just concerned to make a beautiful ship. They didn't care about anything else. They didn't put the money in the radar. Didn't realize that an iceberg is not what's on top; it's what's on the bottom. And sure enough, they sunk in. They lost everything. So you don't want to be that person. You don't want to be the next Titanic, because you got to have the radar to see where those orders are. Now let's talk about this. Fausto, I heard that these are fake orders. I mean, that's the next thing people tell me. First of all, you tell me a brokerage firm that will allow you to put fake orders out there. And then some of you will be like, oh, what about spoofing? Spoofing's illegal. You really think a brokerage firm is going to play games and try to spoof? You know what a fine is for that? I mean, like, does it happen? Maybe. I don't know. But I just know that, you know, if you're going to do it, the repercussions that you're going to get and the fines. Let me tell you something. The SEC loves going after people that do stupid stuff. Okay? They think they get away with it. Let me tell you, they're not so dumb. All right? And they wait to keep doing it and doing it and doing it. So at the end of the day, let's not sit there and question that that's a fake order. That's a real order. Okay? Now, can a guy cancel an order? Yeah, listen. 626 people, they decide they would change their mind. I change my mind all the time. I'll go out there and put an order out there and say, hey, you know what? Maybe I want to keep it. You know? So, I mean, it happens. You know, but it's me and 600 other people in the world. So let's talk about why this stock actually did go past $9, because you know what? That could happen. You know, stocks have resistance levels and you're like, wow, look at that stock. I was thinking it was resistance and it just went past it. You know what? That could happen. How does that happen? Right here. Look at all the orders out here. This is something called time and sales. $9, $9, green, 16,000 shares, 17,000, 1,000, 1,200. Apparently the guy got executed. Okay. And you know what? That could happen. Remember, how do stocks go up and go down? Supply and demand. So there was a demand. People bought it from that seller. And guess what? The stock went from $9 to $10. So when you wonder and be like, well, Fausto, you told me it's resistance. Yeah. But I also could tell you that someone could go out there and execute the guy. And that could happen, right? We've seen stocks take off. You see, to be successful in trading, you have to understand the basics of trading first. I was actually, you know, I do a lot of charity work. I've trained NFL players, you know, teaching people, you know, how to trade, because a lot of them, you know, after they retire, they give their money to financial planners. They lose it for them, you know. So I work with a community that helps them. I actually just did another charity where I helped prison reform people to teach them finance. I actually just did an event on that, you know, trying to help, you know, prison people to come out in this world so they can actually do some, understand finance. Maybe they can get into that. I mean, listen, it's a big business. It really is. You know, I had my son next to me. He's like, could you teach me how to make money? His friends come up to me all the time. Could you teach us how to trade? They don't even know what a stock is. I'm like, well, could you teach me how to trade? No. And that's the mentality. Forget about learning, you know, what's going up and going down. You got to understand what you're looking at first. Because our job is not to teach you how to make money. It's to teach you how to stop losing it. So was that hard to understand? Was that hard? Was that difficult? What do you think? You got this? No. Now what you need to do is you guys need to come into the trading room and see what's going on and see if this stuff really does work. Here, I'll bring up my trading room right now. I'll show you what's going on. Right now, this is our trading room. I'm going to invite all of you guys to come here. Did you guys see the stock SGMO? Look at this. Look at this gorgeous stock. Look at my instructors sitting here on the bottom talking about it. Talking about, certain stocks. Look at that. SGM keeps still moving up, showing you people, and everyone's actually working together like a team. And these are my instructors and everything else. But look at that. Stock goes from $10 this morning and it just keeps going up. Why would this stock go up? What is driving this stock? Well, anybody here use like TradeStation or anything like that? I'm going to show you how to use the matrix. I have a video on YouTube, but come and watch me live and show you how it works. Look at these orders right here. See if they're getting executed. See where the buyers and sellers are, how to work with a team. That's what it's all about. Listen, every one of you here need to learn from a mentor. And you know what? You're going to need to learn from more than one. And let me give you everybody advice. Let me give you some very important advice right now. Okay. Anybody own a business? Anybody here own a business or hired employees? Okay, a few of you have. Okay, some of you haven't. That's okay. The reason why, have any of you ever worked for somebody and you had a new colleague come to your job, you're like, oh, I've got a new employee to help out. This is great. And now you're thinking that, wow, I got this new employee. He's going to help me make my job easier. And sometimes it doesn't really work out. Okay. So what we do here at Cyber Trade University is, I'm just going to tell you point blank, we don't train everybody. A lot of people really don't qualify, and, I won't go out of my way to train somebody because it ends up hurting me more than anything. I got a 5-star rating on Google. We're endorsed by almost every direct access firm in the industry. I don't need to go out there and, just to train somebody and make a residual on them. It's a waste of my time. It's a waste of my reputation. It's a waste of your time. Okay. But where I'm going with this is this. If you own a business and you had an employee working for you for more than 3 months, what are you going to do? You're going to still keep paying them? No, you got to fire them. You got to get rid of them. What I mean by that is this. Some of you have taken courses with other people. You tried Forex. You tried options. You tried futures. If you really don't get it after 30 days, 60 days, you're probably wasting your time. So if anyone tells you that, oh, it's going to take you 6 months to a year, they're pulling your chain. Okay. They're wasting your time. You get it or you don't. You've been here for 1 hour, less than 1 hour. I think I was only talking about 30 minutes. Okay. Before I got into the detail, imagine what you'll learn in a week. Imagine what you could learn in a year, but it's not going to take you. People say, oh, go through my program, but you got to stick it out. If you don't get it right away, you're wasting your time. And you know what? It's not that they're bad people. It just might not be for you. Anyone ever go dating? Some of us have been married. I've been married for long. I dated girls in the past. And you know what? Some of them are nice. We just weren't a good fit. I'm like, you know what? Everything was perfect, bro. But you know what? It was just wasn't a good fit. It might work for somebody else, but not work for me. If you own a business, you probably sound, wow, this guy's such a nice guy, but he just doesn't get it. He's not for us. We got to let him go. Well, in your situation, when it comes to trading, I know you all want to do it. You see what's going on with COVID. You see what's happening in the market. The reason why I'm stressing this a little bit more, because I know a lot of you here are starving for education, trying to find the right person. You got to sample a little bit of everyone's stuff before you can get it. Okay. So please keep that in mind. But every one of you are going to need mentor. And let me tell you something. This job is the greatest thing, especially with COVID. You're home. I heard Melissa talking about, like, one of the biggest issues. I had that issue. People says, well, my boss won't let me trade at home. Well, now you're home. So you can have time to do both. You know what I mean? You have the free time. And it really is a great job. Listen, you hear him bashing the markets on TV all the time. Oh, we got to go after people on Wall Street. You got to go after people. Why would why are they bashing us? You know why they bash us? Because they know they make a lot of money. So as much as let's not be jealous. Let's just join them. Why are they making so much money? And you want to know what? You would probably know that unless you live here in New York and you see these guys driving these Ferraris and having these big, Hampton homes that they spend $1 million just for 3 months just to rent it, for crying out loud. I mean, like, what are they doing? It's unheard of. But some of us don't need that. Some of us just be happy because we know Social Security is not going to pay enough. We can't live off our pension. Some of us are out of a job. And you know what? If you're really worrying about that $1,200 stimulus check, you maybe shouldn't be here. This job pays a lot of money, pays a lot. Why not learn first before you go out there so you can go out and make things easier? Marcel says, where do I get level 3? That's a great question. It's going to cost you $9, and I'm going to tell you in the next few moments. Okay. All right. So, just to let you know, just like Melissa and just like Hubert coming on, if you really want to know you're dealing with a reputable company, there's another thing I want to advise, and make sure you do your homework. You might not like me, might not want to do a class with me. And I get it. I'll take it personal. But if you do, please make sure that whoever you're training you has been featured on some of these, from brokerage firms, and not just on TV, because these brokerage firms are being regulated, and they don't need to have somebody out there that's teaching people how to lose money, or is really, because they do background checks, they do credit checks, background checks on all these schools, including us. So believe me, they do their homework, and if it's good for them, it's definitely good for you. So that's just an advice I want to give everybody, to be very careful of that. Now, this is what I'm looking to do, everyone. I want to invite all of you to come to my trading room. I want to show you this stuff really does work. Okay, because I can't teach you to trade in an hour. Okay, I can only teach you to spark your interest. If you thought you learned anything in 1 hour, imagine what you'll learn in a week. And this is what's going to happen. We start trading at 8 o'clock in the morning Eastern time. We actually do a lot of pre-market trading. And with that, we'll do live commentary. I started the first online trading room in the industry. A lot of people that you see that are out there that are doing it, some of them are actually my students. Okay. And we encourage people to go out there, because eventually you're going to outgrow CTU. We don't hold anyone hostage. We don't, the thing is, once you get it, all we tell you is like, where did you really learn? Oh, I learned it from CyberTradingu University. I learned from Fausto. I'm one of the original Souls Bandits. I'm one of the original day traders. And you know what? That's all I ask. But if you want to know how they all figured it out, here's your opportunity to come to the original trading room, how I started it. And we do it all day. And this is what you're going to get. It's $9, okay, for the trial, money back guaranteed. This $9, honestly, is just it's a application fee to let us know who you are, what your interests are, because we want to make sure you say who you are. And plus we want to make sure we know who's in the room. But this is what you're going to get. You're going to get the live trading room for a week, 3 daily market meetings. You're going to get a morning and afternoon watch list. You're actually going to be able to talk to somebody. Yeah. Some people, I heard they spend thousands and they can't talk to anyone, no instructor or anything. You're going to be able to talk to us. Okay. You're going to get a crash course on day trading. And as a bonus, if you register right now, I will actually give the first 20 people a free coaching session. Now, you're probably asking, Fausto's going to waste his time for $9 to talk to me? Remember what I told you. This is a job interview, okay? I'm not going to waste my time and train somebody if I feel that you're not really qualified, okay? And that's okay. That's okay. Don't be offended. You'd rather lose the $9 and I waste my time knowing I spent months to train you and you're going to end up blowing up your account anyway. It's not for everybody. And you know what? A lot of other schools will not do that because all they care about is their fee that they're charging you for their training. I'm looking for traders I could trade with that can make money together with. So go out there, $9. The link's there right now. You got about 15 minutes until Hubert comes in, and then he's going to basically take over and tell you a little about him. But I'm going to give you guys some time to do it. Now, does anyone have any questions in the meantime as you guys are registering? Any questions? When could I start? Well, honestly, I would start right away, but probably if you want to start on Monday, you need to actually talk to an education advisor. They're going to tell you what you're looking at because we don't want you going to the room blind. Some people go in these rooms like, okay, what do I look at? If you can't understand what's going on, you're probably going to quit. You know what I mean? So we're not just going to throw you on the floor. We're going to walk you around. We want to show you the professionalism of our customer service and the strategy. Because remember, you know, my goal is to teach people to make money, not teach people how to lose money. Are you trading futures, E-minis? No, I only trade stocks. I do stock trading. I'll do some swing trading, very little options. But you're going to have somebody, Hubert's going to come on, talk about futures. I'm not the jack of all trades. And you shouldn't have somebody that ever does that. All right. There are people that specifically are trained that do that. And those are the people you want to learn from. And by the way, it's only about 30% difference. A lot of it's psychology, discipline, all that stuff. The hard part is, you know, executing, doing those trades. You're more than welcome, Gregory. Let me see another question. Don't need to have an exchange account too. Yes, no, you don't. Listen, you don't need to have a brokerage account. You don't need to do anything. All I want you to do, oops, sorry about that. All I want you guys to do is to go out there and see other people make money in the room. Listen, we don't brag about making money. We don't go out there and, show offs. We don't accept any of that stuff in our room. These people that are in here are serious traders. And if you're good enough for us to let you in, they're going to do everything they can help you because if you're a good trader, you're going to make them better. Two heads are better than one. But you do not need a brokerage account. You're only there to watch. We don't want you to buy anything. We just want you to see other people making money. Okay? That's where it comes down to it. So I would probably start on Monday, you know, locking in for, like I said, first 20 people though. If you're not the first 20, you're still going to be talking to an instructor. Okay. But I only have X amount of hours to spend in the week before I could do interviews. And that's where it comes down to it. All right. A couple of shout outs right here. Just a few people just registering. John from California's got your registration. Welcome aboard. Michael from Florida just got your registration. Welcome aboard. By the way, very important, when you fill out that questionnaire, at the end of when you register, there's a questionnaire. Please fill it out in detail because that also is going to help you with your application too. Okay. Anything else? All right. So let me give you guys a couple of minutes to get ready. And then I'm going to bring Hubert Centers coming across. He's going to pick up where we left off. So I'll give you some time to register. So don't go anywhere, everybody. We'll be right back. All right. All right, guys. You know what? We're going to get started. It looks like everybody's all back. And want to just do a quick audio check. Hubert, is your mic working? Just see if Hubert's there.
It helps if you take yourself off mute. It really does help. If you forget to unmute yourself, you'll talk to yourself for a little while there with no one answering. Yes. I'm good to go.
How you been? Let me tell you something. You look great in that photo.
No, thanks, man. Thanks. Appreciate it.
My God, you still a good looking guy you are. Look at that. Still there.
I got a face for radio. Face for radio.
That's it. How you been? How's everything going over there? How's quarantine with the kids and stuff?
Good. It's all good. I'm always a hermit anyway, so I don't like being around people and humans as a general rule. So being quarantined is just my normal life because I'm a hermit.
This is perfect for you. So maybe we should do a lesson on that.
Yeah, you don't have to be around other humans all the time. A lot of people like it, but you don't have to be there.
That's it. Yeah. Well,
oh, here. See if you can recognize this voice.
Hey, buddy.
Oh, is that your wife?
Nope, not my wife.
Hey, Fausto.
This is my second wife.
Oh, Jeanette, where the hell you been? How's it going?
There you go. She can't hear you. She don't have headphones on. She just came in and say hi. She's here
okay.
Knocking out some stuff this week.
That's great to hear. Well, anyway, Hubert, thanks for coming here. And I just want to do a quick intro for you because it's been a while since I've seen you, and it really stinks because if everybody here doesn't know this, I mean, we do so many events together, and we always run like a big event in Vegas where we meet all our partners and we see our students, and we've done so many events together, even at the expos and stuff like that. But I know Hubert for it's so scary. It's like time flies. I've been doing this for 25 years. I think I know Hubert for almost like 15, maybe 20.
Mm-hmm.
He's been around as long as I've been around, and and that's something that a lot of you people have to realize that if you're ever going to do something with anybody, we have a reputation as everything. And you know what? The more you're out there, the more people see you are. I mean, listen, that's how you know you're dealing with a reputable person, because obviously, whatever we're doing is working. He basically is known for his no BS approach, and that's really what it comes down to. It gets right to the facts. He's like a little bit more of me. He's a little bit more brash, but we care about training people how to do it right. Otherwise, you shouldn't be trained at all. You should really just quit. It's not, and it's okay. And I say it all the time. That's not a bad thing. But you know what? He's been featured on Bloomberg, Fox Business, CNN, CNBC. I mean, you said he's been on every magazine that's out there because, people follow along. He does a very good job what he does. And, and he basically has no BS approach. That's where it comes down to it. So Hubert, I want to basically pass over the mic to you and tell him about this whole BS approach.
All right. So help me out here one time, Fausto. How do I share the screen? I always forget
I'm going to stop sharing my screen.
There it is. Now I'm talking. I'm cooking with gas here in a minute. Share screen, and I want to share. I think it's this one. And then hit share. Thank you, sir. I appreciate it. Let me see if I can see where the Zoom little command center is so I can always see y'all. That'll help me. All right. So can you guys see, just answer me in the text if you can see the slide that says how to find better trades in up and down markets. That's what it should say on your side of things. If you guys will just tell me yes in the chat box, that'll make sure.
Yeah, we see it.
All right, cool. Thank you, brother. All right, so first, a warning disclaimer. All right, warning: trading is incredibly difficult. Not everyone should do this business and can do this business. And second, I can't guarantee you a damn thing. I know there's a lot of people on the internet, they'll try to do that stuff. Like, there are zero guarantees in life, and there's damn sure no guarantees in the trading world. I'm not going to guarantee you anything in this presentation. I'll show you how I do stuff. Sometimes it works, sometimes it does not. The objective of the game is to make more money than you lose, and that's what you're going for, right? So with that said, make sure you do read the warning disclaimer and the CFTC rule 4.41, because I know there's a lot of people on the internet just touting stuff like you start with $100 and turn it into $10 million. And maybe you can. I think that would be really, really hard to do. I'm not saying it's impossible. It's just highly improbable if that's going to go down. So I like to make the warning disclaimer harsher than most people and say your trading career is probably going to end up like a bad country song in reverse. Like your wife's going to leave you for your best friend. Your kids are going to grow up to hate you. They are going to foreclose on your single wide or double wide trailer, and they're going to repossess your Ford or Chevy pickup truck. And your dog's going to die because there are no cats in country songs. So if you understand the harsh disclaimer I just made you aware of. Give me a no in the chat, and no, because one of the tactics that a lot of people that'll try to sell you stuff online is get you to say yes a lot. So I'm gonna try to get you to say no a lot, and then I'm still gonna make you a special offer on the back end of this bad boy. And if that offends you, I apologize. And you don't have to buy it if you don't want to. So let's get started here. My name's Hubert Center. Like Fausto said, I'm kind of known in two different industries, in the trading and investing niche, and in like the Silicon Valley investing in startups, as a guy that's got a no BS approach to stuff. It's not because it's a tactic that I designed that way. I'm pretty simple. I'm allergic to bullshit, and I try to avoid it at all costs and go, hey, what's the bottom line? Like, what's the risk I'm going to be associated with on this trade, and what's the potential I can make on it? And the truth is probably somewhere in the middle, right? Like I'm not going to make the least amount, and I'm not going to make the most amount. I'm probably going to do somewhere in the middle, and that's how I kind of live my life. So here's a bunch of different pictures of me with famous and wealthy people. I'm not going to go through the rigmarole and tell you like I was poor, I made money, I've lost it a couple times, and I made it all back. I don't think you all care about that stuff, frankly. What I will tell you though is when I was growing up in the hills of Eastern Kentucky, I didn't have a ton of real good role models. I did have my mother and father, which were both factory workers at a company called American Standard. You've probably seen the commodes, the faucets, the plumbing fixtures that American Standard puts out. And to be honest with you, they taught me more than anything, like just the hard work ethic of, hey, get in there and grind that stuff out. I could have went into the coal mine business. I decided not to because I'm just not into that type of career, just being under the ground with the prospect of being electrocuted or drowned or cave in. I was like, I'm going to avoid that. Now, there were 3 other industries in Eastern Kentucky when I was there. There was the good old-fashioned marijuana business, which we called weed back in the day. There's also the good old-fashioned meth business, methamphetamines. And you could have went into the good old-fashioned moonshine business. I decided none of these 3 would be a good career choice. If you're good at them, you probably end up in prison. So I was like, I don't want to do that. So what I did is I left when I was about 17 and figured I would try to figure out how to make money in the United States, right? In the country that I live in. And I found by either working for other people, volunteering, hiring people, paying them crazy fees to meet with them and ask them some questions, or doing just old school apprenticeships from them, or giving money to their charity. And what I found when I was interviewing a bunch of millionaires and billionaires, they really did 3 things. And it was really simple. Number 1, they would either own or invest in their own businesses or other people's businesses. They would 2, be in the markets, that's what we're talking about here today. And number 3, they would own some real estate. And those were the main 3 ways that all the cats and the men and women that I talked to, that's how they made the majority of their wealth. So I recommend that you do a little bit of all 3 of those. Now, it is my opinion that you'll make more money if you specialize in one instead of trying to be a jack of all trades. So I would either, start up your own business, make it that way, and then invest in the markets, or invest in the markets and then take that money and invest into other businesses. And then you can also invest in real estate. So heads up, it's going to be a tough grind. I've never seen anybody go like this, like linearly, like from point A to point B, where they just can, get better year after year after year, where they get to their X point. What happens is you usually have failure on top of a failure. You get pissed off and you're like, I'm not going to quit. I'm just going to figure this out. And then just by you just not giving up, you'll eventually figure out how to get to X. So that's probably how your career is going to go also. So congratulations. If you're into trading, which you probably are, you're in the right place at the right time, but only if you're into one of 2 things. How many of you, by just to show, do you look more at technical analysis, TA, or do you look at more fundamental analysis? Which one of the 2 do you gravitate towards? And it's okay if you use both. I'm more of a technical guy than I am a fundamentalist guy, but I've used that in the past too, right? So look, so I'm getting a lot of TA. That's perfect. So I'm going to be talking about how to read the chicken bones, right? Which a lot of people kind of accuse of doing, like we're supposed to be some kind of Swami or something, reading the tea leaves in these charts. And it's really just, you're just looking at patterns is all you're doing. And you're hoping that those patterns recreate themselves and repeat themselves over and over and over again. And they do. So let's take a look at that. So I'm going to talk about a strategy or a tactic that I believe will shave anywhere from 3 to 5 years off your learning curve. All right. I wish I'd have had this. I wish I would have invented it. I didn't. I've been talking about this strategy probably for about 15 years now. I love it. I wish I invented it. I did not, but I do know how to use it really effectively. So what does this work on is the first question you're probably going to ask yourself. This works on stocks, options, futures, forex, bonds, gold, commodities, cryptos. I trade all those. Where I spend the majority of my time is futures and stocks, and I do a lot of angel investing in Silicon Valley companies. So I'll dabble in options. I'll trade a little forex. I trade a lot of bonds. I dabble in gold, commodities. Really, futures is going to encompass a lot of the bonds, the gold, and the commodities. And I'll do some cryptos, but not a ton. It's less than 10% of my net worth on that type of stuff. Now, it's really important. Let's see what you guys trade. What do you trade the most of? Is it stocks, options, futures, forex, bonds, crypto? What do you trade the most of? Like if I had to take everything away from you, like, hey man, don't take this away from me. I like trading this market. What is it? Options, stocks, options, cryptos, options, forex, stocks. All right, so we got a mix of everybody. That's perfect. All right, now, what time frame do you use the most? Are you more of a day trader, which is fine? Are you more of a swing trader, which is good too? Or are you more of a longer term investor? It'll work for all three time frames. You just got to tweak it a little, and it's not hard. All right, cool, perfect. A little bit of mix there too. All right. Now, this will be a little bit different. I am going to, for the first half of this presentation, I'm just going to teach you all the theory, right? All the theory, back-tested stuff. And then as soon as I get done with the theory so that we're all talking the same language, I'm going to shift over and just go all live charts, and I'm going to walk you through how I do this in real life, okay? You'll see the good, the bad, the warts, and all right? So this is the S&P 500 in the last 5 years when we back tested this strategy. So what I'll do is I'll just come up with crazy ideas, and I'll send it off to my back tester and say, hey, see if that works. And they'll be like, yeah, it looks good. Or it'll be like, where did you come up with that? None of that works. I'm like, okay, well, that's a terrible idea. So this, when we tested it, this were the results in the last 5 years. Stocks in the indexes, it worked on 430 out of 500, which means it had about an 86% hit rate. All right, working. So notice it does not work on everything the way a lot of people will tell you, like, my stuff works on everything. My stuff does not work on everything. It works on 86% of the stocks in the S&P 500. And now if you followed every single trade on this system, and if you did every long followed by every short and every long and every long and every short, your return would have been 33%. Now you can increase that from 33 to potentially 79% if you remove the counter trend signals and wait for a 3-day confirmation if you're a day trader, or a 3-bar confirmation if you're an intraday or swing trader. And I'll walk you through that. And all this means is if you've got a massive uptrend like this right here, wait until a trend line is broken before you start shorting stuff. So in other words, stay on the long side of the market, not the short side of the market. And that way you won't have to take those counter trend trades, and you can potentially increase from 33 to 79%. Now, if you trade currency futures and or Forex, it has been profitable in 29 currencies over the last 10 years using a multi-time frame analysis approach. Fancy ass way of saying, I want the long signals all to be pointing in the same direction. If I get a long on the daily, a short on the hourly, and a buy on the 10-minute, that's not all going in the same direction. Now, I definitely want 2 out of the 3 to be in my direction, okay? But I'm probably going to have a better trade if I have all 3 pointing in the same direction, which means I just got to be a little bit more patient. All right, time frame selection. You should have, and this is the most important slide in the entire presentation. If I lose you here, I'll lose you in the rest of the presentation, so I don't make sure I do not lose you. All right, so when you're looking at charts and when we're trying to decipher the chicken bones, right? And read the tea leaves of the market, you got to figure out like your objective, right? So when I look at this, when I'm looking at a daily time frame, okay, if I'm looking at a daily time frame right here, then my time horizon over here at column 1, 2, and 3, my time horizon at 1, it lets me know is like, all right, you're probably going to be in that trade for weeks of time if you're looking at a daily chart. Does that make sense? Just give me a yes, obviously, if it makes sense. All right, now if I'm looking at an hourly chart, I'm probably going to be in that trade for days of time. And in most cases, the minimum I'm going to go for is 3 days. Now, I messed up a little bit here. In the cloud extends to the right, it extends 20 days to the right on a daily chart. So obviously, I'm going to look to stay in that trade anywhere from 1 week up to weeks. So it could be 2 weeks, or it could be 6 months, right? It all depends. I could get stopped out too. Heads up, if none of you have ever traded before, getting stopped out is a reality. Losing money is a reality. It's going to happen. Like, I don't know of any way how to make money without at least taking a risk. Okay. So when you think of making money, think risk first. Okay. Now, if I'm looking at a 10-minute time frame chart, then I know I'm probably good for 2 to 4 hours. Does that make sense to everybody? Just wrap your head around it, because when we, and what I want to do is I want to look at multiple time frame analysis. So if I get a 10-minute signal on something, then I go, oh, I'm probably going to be in that trade for about 4 hours, unless I get stopped out. Now, it could go on to rally for 18 hours, 24 hours, 72 hours. It could rally for 4 days. But the minimum I'm going to go for is 4 hours, or the risk of getting stopped out. All right. So this is what you want. It's the #1 technique used in Japan. There's this the #1 best-selling technical analysis book there, and they talked a lot about this technique. You're going to know exactly what to do in seconds once you look at a chart. And Ichimoku, I know it sounds like I sneezed, and heads up, I've got a real Southern drawl accent because I live in Kentucky. So if I can do this, if this fat redneck from Kentucky can figure out this stuff, you guys can figure it out too. But once you do that, Ichimoku, when the translate it, what it means is at a glance. All right. Now, I don't know if you've ever tried to translate something from Japanese to American to redneck. It's complicated, confusing, expensive, and just a pain in the rear end. But it is useful. All right. So let's take a look at this. And this is the edge for you now. Have you ever had an indicator that told you what happened to the price in the past? Of course, we all have, right? And as neat as they are to look at, they're kind of useless, right? Like, that would have been great to know 2 days ago. Have you ever used an indicator that tells you what's happening right now, also known as the present? Of course you have, right? Now, have you ever used an indicator that will tell you what might happen in the future? All right. Like, it's got a future predicting algorithm tied to it. All right. So there's some good ones and there's some bad ones. I'll tell you 3 free ones that you can research. So you can do Elliott wave, which is a good approach. It's kind of hard to pick up on. You need a really good teacher in order to do that, because the inside joke is, if you took 10 Elliott wave guys and locked them up in a room, you'd come out and they'd have 7 different counts. And like, okay, that's not repeatable. So it is really important that you really get the foundations of Elliott wave down and learn from somebody that knows what they're doing. Another one, which is one that you all probably know, is Fibonacci's, extensions, price targets, right? We all use that. And then the last one that I'm going to help you with today is the cloud, also known as Ichimoku. Now, here's what it looks like when it's all on the chart. Okay, now you're going, oh, dude, I thought you were the simple guy. That looks a little busy and confusing, right? So if you think this chart looks busy and confusing, give me a yes. Because it does at first. You're like, man, that's a lot to look at. You're like, for me, I think it looks beautiful because I know what it all means. But to you, you may be going, holy shit, what is that? So let's go back up here and break this down point by point. So first, you should have a blue little ribbon running in from left to right and from left to upper right of the center of the screen. If you have a blue thing running through a black chart, just put yes in there. So here's the first main themes. #1, this thing is called the cloud. So we're going to write this down together. CLOUD. That's the cloud. Now, the concepts or the core frameworks on this thing is, whatever you're trading, is if it's above the blue thingy, which is called the cloud, if the price is above the blue thingy, you want to be on the buy side, and or you want to be long, which is the same thing. Pretty simple, right? It's going to act, this is the second core concept, it's going to act like a nice little fluffy pillow or a mini trampoline, nice little fluffy pillow, mini trampoline, mini trampoline, mini trampoline. And no, I didn't skip this one because it didn't work, or it won't work, right? So in this example, we've got 1, 2, 3, 4, 5, 6, 7. 7, we got 6 out of 7. Is your experience going to be like that? Probably not, because it's trading, right? So what this is telling us is, all right, we want to be long whatever this thing is. And look here, this is an old slide that I created back in 2014. I'm still using this stuff today, but it makes no sense for me to change the slides. So what I'm going to do is, we're going to go theory first, and then we're going to go real world application and scan the markets. So that's the first thing, cloud. So everybody type in the word cloud in the chat box, CLOUD. I promise you'll learn it better if you type it in there. The second line that we're going to look at is this yellow line. It's called the turning line, TURN. Now, it's called something totally different in Japanese, but if I try to pronounce it, I'm going to sound dumber than I already sound on this presentation, so I'm not going to translate the word for you. That's just a 9-period moving, or not a 9-point, it's a 9-period midpoint average. And what's going to happen is a lot of times it's going to come down here, touch the yellow line, and then take off and bounce again. But there's going to be the time where it comes down here, kisses that line, and then breaks down below it. And then when that happens, it's going to go to what's called the standard line. So here we go again. Cloud, C-L-O-U-D. Type this one in. T-U-R-N. Type in the chat box. Turning line. That's the yellow line, the one that's always closest to the price action. And now this third line is called the STD. All right. STD stands for standard line. So just type in STD. Now, if it breaks the yellow, it'll probably go to the purple and then bounce out there. So what we're looking at is first pullback, second pullback, third pullback, fourth pullback. If it trades more than 3 days below that, heads up, I'm not on the long team anymore. I'm now going to be on the short team. I'm going to short the fire out of it and hope it goes lower. Now, that's the main thing. Now, there's one last line called the lagging line. So here we got cloud, C-L-O-U-D, turning line, T-U-R-N, standard line, and lagging line. Here's why this is so powerful and the reason I think all of you should be using it. Number one, it's a free indicator. If you don't want to buy my class, figure out how to use it yourself. I don't care. I already know how to use it. So this is telling you what happened in the past. This is telling you what's happening right now, also known as the present. And then this cloud is telling you, heads up, we're going to go up. We're going to go sideways to slightly up. These are the points that I recommend that you buy here, 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 and here. If I break the cloud and I close down here for 1, 2, and 3 days, then we're no longer going to be long. We're going to be short biased. Okay. And then we'll short that. Does everybody understand the core concept so far? Pretty easy to grasp, right? Let's take a look at some other charts. So that's black. This is white. And this is how you calculate these things. So number one, this is an ancient chart of 2012 of Apple. When it was above the cloud, you're long. When it's below the cloud, you're short. Now let's look at what's all on this chart. We've got the cloud. Below the cloud, we're going to be short. Above the cloud, we're going to be long. Here we have the turning line because it's closest to the price action. Here we have the standard line. And here we have the lagging line. And then obviously that's the cloud. How this is calculated is you're going to take the turning line as the midpoint calculation where you take the high and the low of the last 9 days and you divide those by 2. Here's all that means. So let's say you're coming from below the cloud. So we want to be bearish in nature. All right. And when we come into the belly of the beast here, and then this is overhead resistance. All right. Overhead resistance. And then what we're looking for, here's the most recent candle. We're going to count back 9 bars. We're going to find the low, which is 434.39. We're going to find the high in that range, which is 465.75. We're going to take the high plus the low, and then we're going to divide that by 2, and that'll give us our X, which will be 450.07. If this confuses you, please, God, don't think you have to be a math major. I got D pluses in algebra in high school and in college. All the platforms calculate this for you, but I know there's some engineers and some doctors in here that if I don't tell you how to calculate it, you guys want to like internally explode for some reason. But that's how you calculate that if you want to. Same thing for if it breaks this red line, which is the turning line, it's going to go next to the bottom of the cloud here, and then it's going to go to the standard line right here. So we would be short biased, break the turning line, go to the bottom of the cloud, and then to the standard line. So for the standard line, it's the same math. It's just using 26 bars instead of 9. It's super simple. That's all it's doing. So what you're doing here is you're using the range of today, going back 26 bars. The high and the low divided by 2 gives you that mathematical number of over here, 425 right here, 425.42. So once again, once it breaks the red line here at 450.07, why is it keep doing that? 450.07, we would short here, target 1, target 2, and then I would use target 3 down here if it was headed lower in that direction. All right, the cloud spans A and B are calculated like this. You're going to take the turning line and the standard line. You're going to plot a midpoint and forward project that price into the future. This is the forward predicting algorithm where it's predicting that this thing is heads up. It's going to go higher now. And then the cloud span B is as follows. So what you're going to do is you're going to take a point in time. You're going to count back basically a whole year, 52 bars, find the midpoint, and then forward project that. That gives you the top and the bottom of the cloud. All right. Now, the lagging line is the simplest one to understand. It's just the lagging. It's the price shifted back 26 bars. That's all that is. You're gonna start here. It shifts back 26 bars. So now you know what everything looks at. Now, what we're going to do is we're going to talk about the different signals that you can take with these things. And there are tons of them. All right. These are some good ones that I like. Lagging line crossing the cloud is the strongest, but it's also the slowest. All right. It's very strong, but it's very slow. And then we've got the price line crossing the cloud. And this is my preferred method to teach everybody first, because it's the easiest one visually to look at. And it's kind of like the Goldilocks trade. It's not super fast. It's not super slow. It's kind of just right in the middle. So it's good for just about everybody. You could also do the price and the lagging line touching the cloud. You could do the clouds touching. You could do that. You could do the cloud spans crossing. That's a decent signal too. So there's several different signals that you can look at. You can also do what we call a crisscross or an X pattern, where the turning lines crossing the standard line. Those are all decent signals for Ichimoku. So here's why we're going to go with one signal over the other one. So in this case scenario, where we've got the lagging line crossing the cloud, which is the strongest but slowest signal, if you remember from the math, it's shifted back 26 bars, which means you're going to be shorting about right here. You're not going to be shorting when it crosses right there. That's not enough days. So it's going to be about 26 days. I'm just eyeballing it. So you would short it around 580, and then you'd have to wait for this to go up at least 26 bars above the cloud. So you go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 20, 22, 24, 25, 6. All right. So let's say that you would short it and then you'd cover it about right here. So you'd go from about 580 to 520. That's not a bad short if you short it there and cover it, but look at all the meat that you left on that little trade there. Now, one thing that you will not hear me say is we don't have the ability to short here and cover here. That's fantasy land. That's in the movies. That's for people that sell products that like turn 100 into 100 million. That's not how real life works. I've been trading for 25 plus years. I think I might have got the top tick and the bottom tick maybe 5 or 6 times in my life, and it's just pure luck. So here's a way to increase your potential profits. You just wait for the price action to close 1 to 3 bars below the cloud. 1 would be aggressive, 2 would be moderate, and 3 would be more conservative, in my opinion. So in this case scenario, you'd be shorting around 630 to 620, and then you just wait for 1, 2, 3 days to come back above the cloud. So now you can see that you've effectively potentially increased your return by at least 3 or 4x, because you got more meat off the bone by just using a better entry and exit tactic. Now, you could also do lagging line touching the cloud, price action touching the cloud. That's a signal. You can do what we call an X pattern, where the turning line and the standard line are doing crisscrosses. Those are available to you too. So here are the bullish signals. Price above the cloud, you want to try to stay long or bullish. Price in the clouds are bullish if they come from the bullish side. No joke. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. And the price and the lagging line will often find support at the cloud's edges. Cloud spans crossing may be a signal that the trend is about to change. And be on the lookout for reversals after real thick clouds. Now, those are the bullish signs. These are the bearish signs. I'm going to grab a quick drink of water. As soon as you guys are done, just type in done. After you get done reading this, I'm just going to get a drink here. And then we're going to go straight into doing this stuff in real life. I'm going to scan the markets in front of you. I'm going to show you what markets I'm focusing on, what markets I'm staying away from. And then I'm going to pick you, 1 or 2 good longs and 1 or 2 good shorts. You use only daily charts. No, I use daily, hourly, and 10-minute. Daily, hourly, and 10-minute is my preferred time frame. It depends on what I'm trying to do with the trade. All right, is everybody good? Now, before I go on, how many of you in here suffer from, this is commonly asked questions. My time frames are daily, hourly, and 10-minute. I do not care what time frame you use. Use whatever you feel comfortable with. I don't care, as long as you're making money if you're using a 2-minute chart, right? But I like a daily, hourly, and 10-minute chart. Have you ever suffered from premature profit taking, where you get into a trade here, X, and it goes up here, and then your stop loss is right here, and it goes up here, comes down here, tags you, and then goes on the direction of your trade? Or have you ever entered in X, the market goes up, goes up, goes up, you start trailing your stop, and then it stops you out right here, and then it continues going on. It's called premature profit taking. It's a rampant disease with retail traders. The best way to do it is to learn how to manage your risk better. There's another free indicator called a parabolic SAR, and if you know how to tweak that thing, it can save you a lot of heartaches, because it's going to take the guesswork out of where's the best place for you to place your stop. All right. Let's go into live charts. You should, at this point, be able to see. Let me see here. I'm going to go share screen. Let me see this. All right. There we go. All right. All right. Can you guys see my trade station now? I don't know if you can or not. I don't have a preview window. All right, cool. So I'm going to walk you through how I would do my homework if you guys were not here. Okay. Let me check my time. I don't want to go over. All right. I've got 20. I'm 2:25. I got to be done by 3. I'm going to walk you through exactly how I would do it. I'll talk out loud. So I'm going to be a little freakish here. I know you guys are here, but I'm going to walk through how I would go about picking my trades for the next day, where I want to go and spend some time, and where I want to avoid like the plague. Now, there's another filter that I'll use. So this is Ichimoku on TradeStation. Down here, let's talk about this. This is called the ADX. So let's take a look at bonds, the 30-year bonds. I trade a lot of bonds, but this will be a good example of why I'm not trading bonds right now. You should be able to see a chart of bonds. So how you use the ADX on the bottom is if the ADX is above 20, it will turn yellow, okay? If the ADX is below 20, it'll turn red. If it's below 20, it means that that thing is in a non-trending mood, okay? All right, and I use a 14 period. So the input is 14, 14 period ADX. My threshold is 20. So as you can see, this little box that I put around the bonds, I haven't traded bonds. I mean, I've traded them a couple times back in here and made a little bit of money. But for the most part, I have avoided them because once COVID hit and the government decided to cut interest rates, the bonds aren't going to move a lot. So when we're looking at this stuff, if the ADX is below 20 and we see this sideways box of pain, we're going to avoid it, okay? So when we're filtering, just keep that in the back of your head. All right, so the first thing I want to do is I'm take a look at the S&P. Is the S&P a good long, short, or leave me alone? Now, here's how I always filter out my trades. It has to make me say, hell yes, that looks like a great long, or hell yes, that looks like a great short. If it's anything in between, it's just a straight up no for me. So for the S&P, it is doing pretty good. It is in a valid uptrend. It pulled back to the turning line. All I would wait for would be a close above the turning line. Now you can see right back here, I've got the other time frames, and this is a good opportunity to talk about multiple time frame analysis. So the daily's a long, the 60's a short, and the 10-minute is in the cloud. From memory, does anybody remember how long an hourly signal is probably on average good for? An hourly signal is good for how many days? 3. So it sold off yesterday at the end of the close. So that would be a half a day, I would say. And then today we got another day down. So we're probably going to have another down day tomorrow because we're usually good for 3 days. Now, I'm still in a massive uptrend, but the minor trend is down. Make sense? All right. So I'm going to just do daily charts from here on out. Yeah. Oh, just makes it easier on me. All right. S&P looks good. I want to see which index future I want to trade tomorrow if this was at the end of the day. Nikkei is solid. NASDAQ's okay. Russell, I would trade the Russell and the YM. So I would either trade the Russell or the S&P because they're the strongest. And I would mainly focus in the Russell. It looks the best. And that's how I find the Russell. Out of those indexes, I would say, oh, I want to focus on the Russell and leave everything alone unless I just want to dabble in the NASDAQ. And then I would go, okay, well, what does the Euro Stoxx 50 look like? They look okay. They're kind of sideways. What about the DAX? Leave that alone. What about the Bund? The Bund is a 1, 2, 3 day long, 4 day long. Would you trade it though? No, because the ADX is below 20. So it's saying it's breaking out, but it's not trending. And this is one of the most trending instruments in the world, folks. When this thing gets to trending, it usually looks like this. But since the COVID stuff, it's got sideways and choppy and sloppy because of the zero interest rates. So I would not trade our 10-year because the ADX is below 20. I would also not trade the 30-year because the ADX is below 20. Does that make sense to you logically. All right, cool. All right, let's take a look at what does gold look like. Gold is a straight up short. It is below the cloud. It's trending, and it just came back up, smacked the standard line, and is headed back down the turning line. In the next few days, it'll probably be worth less than 1773. What about silver? Silver is stuck right on the cloud. For me, that's a pass, and the ADX is a little low. I would just pass on silver. What about copper? All right, you guys know enough to be dangerous. Would you be long or short copper? Please, God, say long. Long is the correct answer. Cheat, long. All right, okay. All right, what would you do in platinum? Even if you've never traded platinum a day in your life, which way would you kind of gravitate towards? Oh, you'd be like, okay, I need to play platinum on the long side then. There you go. All right, cool. What about crude oil? Crude oil is a long with a target of about 50. What about heating oil? Heating oil is a long with a target of $1.50, and it's trending well. What about natty gas? Natty gas is a short with a target of about $2.20. Now, you see how quick I can go through that and go, oh, I want to play with that, or, oh, God, I want to avoid that like the plague. That's how you build up a watch list of stuff that you're going to trade the next day. And then what I'll do is I'll take those and build a list out of them. The meat markets, they're not really trending right now, so we're going to avoid live cattle, lean hogs, and feeder cattle. They're not doing anything. We're going to leave them alone. Rough rice, if you just love to grind your account to dust, go trade some rough rice. It's non-trending, and it's dead sideways. It's just flatlined. Leave it alone. What about wheat? Wheat is in the cloud. It's a pass. It's about to be a good trade, but it's a pass right now. What about bean oil? Good looking long, target 40. What about corn? Corn, decent trade, 432. Oats looks amazing, right? Look how it was sloppy and choppy forever. Broke above the ADX trending line. 1, 2, 3 days above the cloud. Next target's going to be $350 or 350. 350. Soybeans also looks pretty good. Now you can see it's probably going to pull back to 1127.78 before it pops back up to 1280. What about soybean meal? It's probably going to come down here and tag this top of the cloud where I'll bid long on it at the point. What about coffee? Coffee is almost a long. It's not quite there, but it's close. Cocoa, I'm just going to leave cocoa alone. Looks kind of weird. Cotton, that's a great looking long. Target $80. What about the sugar? Sugar's a decent long with target 16. And then OJ would be, I would wait for it to drop back to the cloud in order to buy it. Now, those are all futures, and not all of you are freaks like me and trade futures. A lot of you guys trade stocks. So here's how I go about building up my stock list. What I do in TradeStation, I go over here and I go to the S&P 500, and then I just double left click and I go click, 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 click. And then I go new below, new below, new below, new below. And here's a bunch of lists of new below the cloud. And then I copy these. And then I come over here, and that's going to be a new short list. So then I would go right there. And then I would grade these and go, okay, anything that's below 20, I'm probably not going to play with. Okay. But I'll go through them one by one and go, okay, this is a new short, but the ADX is too low. So I would just go delete. Akamai, ADX is too low. So what I do here is I just grab these and delete all those. So I don't need those. DG, I could get away with doing this one. It's a clean break and it's headed towards 20. So that would be a decent one. DRE, decent. ES, decent. Doesn't fit my criteria. I could pull that one off. FBHS, nope. FE, that's just weird looking, but you could pull it off. GILD, that looks decent. HRB, you could pull that one off. MCO, you could probably pull that one off. And NI, we're going to leave that one alone. All right, so I'm going to pull off all the ones that don't fit the strict criteria, and we'll just go with the ones that do. So now I've got from all the stocks in the S&P 500, all right? What happens is I've figured out what futures I'm going to trade, what indexes, and what other markets that look good and look bad, and I add them to a list. And then what I do is I come over here and build a list of continuation shorts, new longs. So on the short side, I would say the one that looks the best according to these charts right now would probably be Moody's, but let me just gauge it real quick here. you could get away with doing FE2. So the two favorites for me are going to be ES and Moody's. All right. So those would be the two favorite shorts, ES and MCO. Let's go over here and do it for the long side. So I'm going to sort again. And now I'm going to do, I don't have anything new above the cloud. Those are all new below, new below, new below. All the rest of them are either in the cloud or below the cloud. So I don't have any new fresh longs. Now, if you don't have TradeStation, and if you don't have something like Thinkorswim, you can still do this stuff. So don't freak out. All right. What you can do is you can use a website like stockcharts.com. I have no affiliation with these guys, but I'll show you how to use this free tool. Heads up, they're going to aggravate the shit out of us with these pop-up ads. Chart and tools. And then you go down here to predefined scan results, predefined scans, and predefined scans. Click it there around time. And now we're going to scroll down to this right here where it says candlestick patterns. We're going to go down to the bottom where it says Ichimoku patterns. And you can say moved above the cloud, moved below the cloud. These were yesterday's signals. Ninja has a scanner that we teach how to use too. It works in TOS, Thinkorswim, Ninja. You just have to download a little indicator out of a form. All right, so these are day charts. So it says there's moved above the cloud, 177 equities, moved below the cloud, 164. And then all you have to do is you have to build yourself a little chart in order to look at these. So we're going to sort this by exchange. So I'm going to go down here to the NASD. And then I'm going to build a chart right here. I'm just going to left click and build this chart. And here's where you want this chart to look like. You want to go overlays, just set it to none. Let's go none. And then we'll apply the Ichimoku on this free website. And then you just go Ichimoku full. There you go. And then I would say update. So there you go. So there's a brand new potential long, AEYE, 1 bar above the cloud. All right. Then I just come over here and just grab another one and say, hey, let's take a look at this one right here. AF or AGFS. Take this, put it in the symbol column, and hit it right there. All right. That one didn't. What did I did something wrong, folks. Okay. I'll skip down to, let me go to this one right here. They just had a problem there real quick. All right, let's go this one. There we go. All right, cool. There's another fresh long. All right. CSII potential target, $39. Now, if you want to look for shorts, predefined scan results, short by the exchange. I'm going to come down here and grab this one from NASDAQ, Adobe. Everybody knows that company. Copy, put it in here, and put it right there. So what you do with that, boom. Adobe is a brand new fresh short as of, I told you they're going to add us to death over here. That's a fresh short with a target of 450. So what I do is I do that every day after the close. I've got little scripts and little programs that I can do it with 1 or 2 clicks. You may or may not. But I then build myself a list that looks like this. Okay. And then I'll go, okay, these are the new fresh longs. These are this right here, this column right here is the continuation longs. These are the swing longs. These are the new fresh shorts. These are continuation shorts. And then these are the swing shorts. And then what I do for both my members and myself is I want to make sure that, oh, you guys probably can't see, can you? Yes. Can you guys see the spreadsheet? I don't know if you can or not. My bad. Let me see what you all say. Yes. Okay. All right. So I'll build myself a watch list and then I'll highlight my favorites in yellow. All right. For the people that want to know what I like in the markets and where I'm focusing at. For me personally, what I do is I just go over here and I take my stuff and I clean it up and I go, okay, these are going to be my swing longs. These are my continuational longs that I'm going to mess with, like CME and Apple and Tesla and stuff like that. And I build that. But what I'm initially looking at is this right here. All right. This is why it's on my list, not because Tesla's trading at 618, because Tesla back here fired off above the cloud as an official long. And then it also fired off right here and right here. So that's how it works. So what I'm going to do for the rest of the webinar, so I'm going to make you a special offer real quick. All right. And then if you guys are okay, I'm going to answer your questions for the remaining part of the time. And if you have symbols that you want me to look at, I will look at them, but they just have to be in all caps and one per line. But before I do that, let me make you my special offer here. And as soon as I get through that, then what I'll do is I'll make everything easier. All right. So here are some success stories. They may not be your success stories. These are just your peers. I don't know how that's doing that. There we go. This is the course was awesome. I've taken a bond trade, made over $900. Do you think I'm happy? I just entered the bond trade, shorted again, where I took profits earlier today after you made me greedy for possible further drops. I'm happy dancing. This is the first time I've had a successful trade during the course. I have the hardest head in the world, and you couldn't have made it simpler. Here's one from Greg saying he likes our stuff. Here's another one from Ron saying he likes our stuff. So we are inviting you to be one of our future success stories. Now, like I said earlier on the disclaimer, I cannot guarantee you anything. There are no guarantees in life, and there are damn sure no guarantees in the trading world. But we are inviting you to join us. Now, this is really important. Who is this not for? This is not for Holy Grail seekers that suffer from hopium. And here is how you know if you are inflicted by this disease. If you have $1,000 in your account and you think that by buying my course, you're going to turn that $1,000 into 2.5 million by the end of February, that's a very unrealistic expectation. I don't mean to be a dream killer. I'm not saying it's impossible. I'm saying it's highly unlikely that that'll happen. All right. If you're a guru surfer, if you follow me and Fausto and 50 other people online, just pick one of us. Like, because we're all going to have different opinions. Try to pick and learn from one or two dudes or chicks from that matter. If you can't make a decision, obviously it's not going to work for you because you're not going to pull the trigger. If you like to make things more complicated for no good reason at all, then you and I will probably not get along. I like simple stuff. And this is the most important thing in the entire webinar presentation. If you are an asshole or if you have asshole tendencies, and you know if you do or not, please, God, never order any of my stuff. I don't want to do business with you. Life is too short. All right. Now, on the other hand, if you are serious about making money in the markets, if you can follow a simple set of rules and directions, and if you understand that your success is tied to you taking action, that means you're a consenting adult, and you and I will get along just fine. Here's a fraction of what you'll learn in the #1 best-selling Ichimoku course on the market. I'm going to give you 7 of my favorite setups with trading rules and indicator settings, with checklists and cheat sheets, with entries and exits, stop losses and targets. I'm going to teach you how to scan the markets with Ichimoku. I've already showed you some of that today. How to filter out the best trades, and then so that you never guess what to do next, and how to avoid some of the head fakes that you may see in the markets. All right. So I sell this course on our website every day for $497. And I'm going to throw in 1, 2, 3, 4 follow-up webinars like this, where we meet every Tuesday. We scan the markets together. You're able to ask as many questions as you want, and you can bring a list of symbols for me to take a look at. Also, if you want to be in the live trading room, we'll throw you in there. It's not for everybody, but if you want to spend a few days in there, we'll throw you in there. All right, that's a grand total of $982. Your special offer today is $297, but there is a catch. We promote this thing on a rolling schedule, so there's always people graduating every Tuesday. Unfortunately, there were only 16 people that graduated this past Tuesday, so I only have 16 tickets available in order to keep the course on track and without over subscribing it, in other words. So if you're interested, which hopefully you are, and if you're not, no hard feelings, go to hubertcenters.com/cloud. You can also call my team, area code 859-963-3445. That's how you do it. I have got 15 minutes just to talk with you all about anything and everything that you all want to talk about, and I will try to help you as much as I can. If you have any questions on anything I covered, or if you want to ask me any hard questions, if you think they're hard, I'll give them a shot. And then I'm going to spend some time looking at charts on your particular symbols. And I'll tell you what I would think if I was long or short that thing. So all I ask on the thing is for you to tell me them in caps lock. So E-minis is easy, at ES. This thing looks good. I would say it's probably going to go higher. Now, if we look at it on a multi-time frame analysis, the S&P is going to pull back for the next couple days. and then probably ramp higher. I would say next target will be 3,800. All right, HYLN. HYLN is a great looking short. So that's a great looking short. I would short it, and the target would be $10. Stop for me would be 936. Target would be $10. LGO. Oh, that's a toughie there. LGO.TO. Mine won't even chart that one. Give me another one. LI. LI is a decent long. It's probably going to roll back to 30 to 25. Let's cheat here and use a little bit smaller time frame. It's still a long because it's above the cloud, but it's spending a lot of time below the turning in the standard line. So you need it to either cross back above 35, or if you can get a long signal above 30 here on a 10-minute, it'll probably rally for a few days after that. SND is great looking long. It meets all the criteria that we talked about. It's above the turning, standard, cloud. ADX is good, and the cloud is forward projecting you higher prices. Now, it's a penny stock, right? It's a penny stock, so you got to be careful because those suckers are manipulated from time to time. I would say this is probably going to go to $2.50 to $3. TJX, is that right? TJX. Great looking long. It has broken all types of resistance, so it's probably going to go a little higher here. And the next target on it is going to be $74. Google, GOG. Google is a good long. It's going to pull back. Let me see multi-time frame here. Yeah, the hourly is a sell signal, and the 10 just went into a sell too. I would say it'll probably drop to 1,700 and then bounce out of there after that. APPL. Apple. Oh, APPL. AAPL. There we go. It helps if you can spell. I'm dyslexic. I would stay away from Apple right now. The ADX is below 20. It is a better long than short for sure, but it's probably going to go back to 140. But right now it's non-trending. I would just leave it alone. There's better stuff to trade. TSLA. TSLA is a good looking long. Another rebid there. Kissed the yellow line, bounced off air, target 700. CRM, just bought a company that I was an angel investor on, a little slack. So CRM is a short. It is below the cloud. It's probably going to drop to $175. HUYA is a short with a stop of 2088 and a target of $16. I have tossed the cloud is yellow and red, similar to you. What do the color differences mean in the cloud? So they'll either use to do blue or green or red or brown. It just means this is bearish. That is bullish. So when it's above this color, it's bullish. When it's below that color, it's bearish. That's all it means. Little MCD, little Mickey D's. Mickey D's here is a short. It's not trending, but it's close. It's 1994. You can get away with it. Mickey D's will drop to $190. $190. All right. So my team is telling me I need to welcome some of you all. So I shall do it. As soon as I get done with questions. What version of TradeStation have custom set inputs for values? TradeStation Ishimoku. I keep air on. I'm using TradeStation 9.5 build 28. TradeStation 9.5 update 28. But you got to have on TradeStation, you got to have radar screen. Or are you seeing, if you're seeing an error on TradeStation, what you have to do is go right click, format window, and then go under general and do spaces to the right 25 bars. If you don't, you'll get this weird error message that'll tell you like, hey, I can't plot this thing. So go into, I'll do it one more time. Right click, format window, general, and then spaces to the right, set that to 25. And then that'll allow you to see the indicator. I don't know why TradeStation does that stuff. Yep. The link is hubertcenters.com/cloud, or you can call the office 859-963-3445. All right. I am going to call it. What are your settings for the ADX? ADX are just regular set to 14. 14. Here's the inputs. 14. Now, a lot of you are wanting to know what the real names of the Ichimoku indicator are. Hey, good luck pronouncing this stuff. We had to pay translators for stuff, but it's Tenkin Shin, Kinjun Shin, Siku Span B, and the Chiku. That's why we call it the turning, standard, and lagging line, because that's the translations. Can I see your settings for Ichimoku? Sure you can. Here they are. They are 9, 26, 52, 26, 1, 26, 1, 1, 1, 5, 1, 5, 65, 1, and there's the colors if you need them. Yep. Do I trade options? I don't trade a lot of options. I will dabble in them. I trade mainly futures and stocks, and then I invest in other businesses, or I'm an angel investor. Like you can see, like I invested in this one, WORK, Slack, which was just acquired by CRM, but I jumped out of it before it went IPO. I was an angel investor in this bad boy and took my money off the table before they went IPO, and it looks like it worked out just fine because I didn't have to ride the wave of any of this stuff. SPCE. Good looking long. You should be a buyer today, according to Ichimoku, because it went back above Ichimoku. Target would be 35.89. Just round that off to 36 bucks. Could you show all of the indicators that you are using? I use a lot of proprietary stuff, and this is just about free indicators. That would take way too long. I could do it. I just couldn't do it on this webinar because I don't have enough time. PYPL is trending, brand new re-entering long. Next target 220, and then after that 234. All right, guys, I want to finish a couple of minutes early because the transition from speaker to speaker can take a little bit of time. I appreciate you guys signing up to the webinar. I appreciate you guys showing up. Good luck trading the rest of this week, and I will see you guys on the next one. Thanks, Fausto. I appreciate it, man.
All right, Hubert, thanks for coming, and you two be safe and have a Merry Christmas, and everyone else, thanks for coming. I hope everybody enjoyed it. We'll see you for the next Cyber Expo. Thanks, everybody. Enjoy the rest of the day.